also its representative in the GST Facilitation Committee of the State of Kerala. Please welcome you, sir.
Good morning to all. This is my pleasure to introduce and welcome today's session chairman, our own senior member, Veeramani sir. When it comes to the direct tax interpretation and the case law interpretation, only in our mind comes to Veeramani sir. That is the way and interpretation and case laws, whenever it is the basic things to understand the taxes. If those who are missing our chairman's session, I can't say anything. Welcome you, sir, for the wonderful session in the morning itself, and I welcome all our student speakers to explore today's event. Welcome you, sir. Over to you.
Chairman Sikasa Saleem and my dear students. How many of you are speakers today? And how many of you are first timers? Good. See, when I started, wanted to get onto the stage, way back in 85, 86, after I passed, I was a person with a lot of stage fright. I can't speak on the stage. So what I was told was the best way to get out of it with these conferences. And coming to the topics of the day, if you look at a common thread between the three topics selected, I don't know how these topics got selected, all the three coming in into one thread. There is one common thread which topics. Can you think what it is? It's something very macro level. There is a common thread on all the three topics. Anything else? Yes? Anything else? Okay. Do you know what is GDP? And how GDP is measured? GDP is nothing but the sum total of, or the value of all goods and services. Right? And if you want to arrive at the value of all goods and services, there has to be some method by which you have to measure. You have to capture this data. And India has been a country where the cash economy was thriving, as a result of which the data relating the value of goods and services was very, very difficult to compile. So what was required was to bring all the value of goods and services in the country into a formalized manner, or what is called a formalization of economy. Now you see the common thread. All the three topics today have only one common thread in it, that is to capture the data of the goods and services. This process started sometime in 1990 or so. First, we had the 10-digit PAN. That was the first starting point. Or no, I think it was in 2000, sorry. It was in 2000 that we had the GAR number replaced with the 10-digit PAN. And you know the 10-digit has got significance. The 10-digit PAN has got significance. Are you aware? It is actually the fourth letter which gives you what is the status of the person. It can be either P, F, C, T, right? Then there is a serial number and there is a hashtag. So that was the first starting point of the formalization of economy. Since then, we have started moving into TDS, we are moving into Form 26As, all these things, one by one, the steps have been coming. The digitization, the capturing of data, the filing of returns from 2006-07 was the one when we started electronic filing of returns, first for the corporates, then for the others. 2007-08, the TDS credit became mandatory through electronic mode. Only if you file electronic TDS returns, you will get the credit. So all these have been steps taken over a period of time. In a country of 135 crores people, it is not able to formalize the economy on a single day. So if you look at from this background, you will find all these are attempts to capture the data of the goods and services, say value of goods and services. And what flows out of it is only secondary. And the best example to tell you is, as you come here, I don't know how many of you walk from here, or if you come a car from here, you will find in that junction, from that to this side, it's a one-way. Have you noticed it? And what do? I don't do that. Normal person, what he does, he will look this side, that side, whether there is a policeman around, I'll just move inside. That has been our habit. That has been the way the Indians have been growing up. You need somebody to police you. You need somebody walk with a stick behind you. Then only you will comply with the law. Now you read the penalties for non-compliance of all this. That is nothing but the policing part of it. What I'm trying to make you understand is that, see, when you learn a subject or when you want to understand a subject, the best way to learn is what is it intended to be and what is it achieving to be. Once you understand that and then start reading the sections, then it is much easier to understand. How many of you touch upon Google to get an answer to any of your queries, whether direct tax or indirect taxes? Heaven's sake, don't ever do it. That's a bad way of learning. You have to learn the habit of opening the books, reading it yourself, assimilating the information, understanding it yourself, form an opinion, then possibly look at Google to find out whether somebody's opinion which has been put up there matches with you, or you have a different opinion where you feel the other person is wrong. Otherwise, if you first start reading it, you will get, if that person has put a wrong opinion there, then you will think that is the correct opinion and you will forget to form your own opinion. So my advice to you all would be, never start learning anything through Google. There is time for you. You can always come, because after all in Google I have seen, it is only one person's opinion. I can put my opinion there. And critically, I have seen that if you critically examine and you want to have an answer to a particular point, you will find none of these articles will give you an answer. One of your speaker was asking me that he was going through the judicial decisions which has been coming in the Kochi Journal. Telling you, I have started writing it since 2005. I am still doing it. It comes every month. So that's a way you start learning, because in taxation, there is nothing like a legacy. It is not like Indian Contract Act or some other act which has been made in 200 years before and has not undergone a change. Taxation Act, we in a lighter vein say, changes every time the finance minister sneezes. Because that is the number of changes. Because yesterday I was speaking to an advocate, asking him to chair a session or take a session in the chamber on the changes to GST, proposed to be effective from 1/1/2022. And he said, sir, we will do it on 15th. I said, sir, changes are effective from 1st? No, sir. Changes are effective from 1st, but the notification will start coming only from 3rd. So we will wait for the notification, understand what it is, and we'll have the session on 15th. So that is the way the law is changing. It is so very dynamic today. And do you know why, if you see the old 1961 or 62 Income Tax Act, do you know how many pages it had? It had about 400 pages. And today, we call ourselves having a simplified Income Tax Act, which has got 4,000 pages. 400 got simplified to 4,000 pages. That is because everyone wanted a particular exemption. Everyone interpreted in a manner that he wanted to make the best use of it. Finally, the best brains are outside. The revenue department had to plug each holes. Each time they plug a hole, we will open another 2 holes. And the way the advocates in chartered accounts are able to represent before the court today, if you look at the total number of case laws, either in direct taxes or indirect taxes, you see that majority of the cases, the government is the litigant. That is because their percentage of success is very, very minimal. They do not have the facility to go through so many conferences, listen to so many experts, listen to so many, analysis, or even books for that matter. As a result of all this, they interpret it in their own manner, and finally it doesn't stand to reason, they lose the case. So they keep fighting right up to the Supreme Court. So that is the reasons why we always say in a chartered accountancy, for a chartered accountant, even though they say there are challenges, etc., as long as the taxation is there in the country, person who are practicing in taxes will have an opportunity. If I had an opportunity in one manner in the earlier days, you may be having it in a different days. In the days when we started practice, what we had to learn was learn the art of presenting the cases. But the advantage was that if I was going up, other than the tribunal, if I go to the income tax officer or to the commissioner of appeals, it will be on a one-to-one basis. So you could even say, sorry sir, I didn't know sir, please help me sir, all this. But today, you are in a digital platform, probably in a Zoom, there will be so many others also watching you, so you need to develop the skill of presentation. So these are all the opportunities for you which comes to you to sharpen your skills, not just learn the subject, but sharpen your skills. Because this 1 hour or 20 minutes is not something which can make you learn any of the subject. So the people who are listening to these speakers will have a broad idea. Especially, I'm sure the second topic, the equalization levy and the e-commerce, are not something which we come across on a day-to-day manner. And for the speakers, the best way is, I have seen the papers. I'm very sure that each of them will not be able to present in the 20 minutes time that has been given to them. So this is their examination of Prezi writing or Prezi presentation, how they are going to present the subject in the 20 minutes. I will not touch upon any of the subject matter writers present because I would like to listen to them and then probably try and conclude how we can look at it. Before I pass on to them, I'll just tell you an anecdote which I saw yesterday. It seems some chartered accountant was asked, how much time do you require to buy a BMW? He said 1 year of practice. Same thing was asked to an advocate. He says, I'll take 6 months. It was asked to a doctor. He said, I need 3 months. And finally the question was posted to Tata. He said 5 years. So everybody was surprised. He said, sir, why 5 years? No, BMW is a big company. It will take 5 years for me to acquire. So that is what you are looking at. Achieve. Sky is the limit for you. Happy learning.
Thank you so much, sir. Now, we will move on to the presentations. Each speaker is required to speak for a minimum of 15 minutes and a maximum of 20 minutes. You will be shown a green card at the completion of 15 minutes, a yellow card at the completion of 18 minutes, a red card at the end of 20 minutes. I repeat, each speaker is required to speak for a minimum of 15 minutes and a maximum of 20 minutes. You will be shown a green card at the completion of 15 minutes, a yellow card at the completion of 18 minutes, and a red card at the end of 20 minutes. You will be given a grace period of 30 seconds to conclude.
This PPT.
The first presenter for the day is Mr. Sunil Vengaldas, a third-year articleship student. He has presented papers in the CA Students' Conferences held at Bhopal and Rajkot. He has also participated in the Talent Hunt competition at the regional level, Chennai. His topic for presentation is the relevance of Annual Information Statement and 26AS. Over to you, Sunil, and all the best.
Greetings to the session chairman, my co-presenter, and my fellows who are present here. And I'm going to present a paper on the topic relevance of AIs and Form 26As. And the topic is going to divide into two parts. First, what is this AIS and Form 26As and its relevance? So before getting into the topic, let's study a brief timeline. So up to April 2020, the government is making efforts to simplify the tax and to bring tax reforms. And in July 2020, the government had made a memorandum of understanding with CBIs to track the information related to the businesses. And in the June 2021, it has launched new income tax portal to simplify the tax filing system. And in November 2021, it launched a new facility called as Annual Information Statement. So now let's understand what is Form 26As. The Form 26As is a tax statement. I repeat, it's a tax statement. And it contains all the details of the tax deducted by the deductor or by the collector, as the case may be. And it contains the details of SFTs like dividend income and sale of immovable properties, etc. And it also has a facility to show the monthly turnover declared as per GSTR 3B. Now, if you see the process goes like this. First, I'll assess my income, then I'll reconcile with the traces, then I'll declare my income and then make payment of taxes. But there is only one problem. Like while doing all this this assessment, there may be a chance where the transactions which are not subjected to this TDS and TCS may not cover here, and there may not be a full proper disclosure. So in order to overcome this drawback, the department has launched a new facility called as AIS, Annual Information Statement, on 1st November 2020. See, this is an extension to the Form 26AS. So now for the time being, they will be running parallelly one to each other, and it is not a replacement for Form 26AS. And the Form 26AS is always to track payments, and this AIS is to track the financial information. The objectives of this Form AIS is like promote voluntary compliance and seamless pre-filling of returns. So if you observe the recent past statistics, there is a considerable increase in the return filing by the individuals. Of course, even I started filing with my stipend. So how many of you are filing returns? No one? Thanks for response. So the other objectives are displaying the financial information, introduction of TIS, facility to submit online. All these three objectives we are going to discuss detail in the next slides. So the relevance of AIS, it has much more broader scope than Form 26AS, and it covers the credit card transactions, capital market transactions, and SFT, interest income, and foreign remittances. So how this AIS mechanism works. Let us assume there is a person called Mr. A, and he has the following incomes, like interest from FD 1 lakh, interest from savings account 25,000, dividend income of 200, sale of equity 5 lakh, purchase of mutual funds 2 lakh, and sale of property 30 lakh. If you consider this Form 26AS, only interest income from FD and dividends can be computed through 26AS because they are subjected to the provisions of such TDS and TCS. But in AIS, it also covers other transactions like interest from savings bank and sale of equity, immovable property, and even purchases. It is not about redemption, even purchases are covered under here. The idea of the AIS is to capture maximum data possible, and there is no monetary limit. Even it is 5 rupees or 10 rupees or whatever, it covers under the AIS system. So it is there 31 lakh 200 rupees. And if you see AIS, it shows total inflow as 36 lakh 25,200 and total outflow as 2 lakh. So this is how a brief overview and in a layman language we can tell. Now the composition of AIS system. AIS system itself has two things. One is TIS and second one is AIS. TIS is nothing but a summary of category-wise income. Like we may have an income of 10 different heads, and each head may have thousands of transactions. All those are consolidatedly shown under the system, and it includes various heads. And this is available on compliance portal. This is a preview how it looks. Dividend, sale of securities, and purchase of securities. And if you go to this AIS, it has two parts, Part A and Part B. If you recall our previous example of Mr. A, in Part A it has all the basic details like who is A, his PAN, his Aadhaar, his mail ID, his mobile number, etc. And in Part B, it contains the details of TDS and TCS. We have seen that the TDS is subjected to this dividend income, etc. All are covered there. And in Part 2, SFT, sale of the SFT is something like we are going to discuss in next few minutes. And the details of demand, refund, and tax proceedings. Assume like Mr. A has a refund of some amount. The entire status of that thing will be here, displayed here, and any other information. Like if is there any point which is covered under 1, 2, 3, it will be covered under 4. So what is SFT? SFT has two sections. One, who are the reporting persons and what they have to report. These are the following reporting persons, like a company issuing shares, debentures, securities, mutual funds, and a company paying dividend and listed on stock exchange. These are covered. These are covered. Apart from these people, there are other persons. Inspector General, a person liable for audit under Section 44AB, and a authorized person, and last banking companies also. Now the question is when to report. These are the various thresholds. Like in case of cash payments and cash deposits in one or more account, the limit is 10 lakh, and purchase of debentures also 10 lakh. If you go to cash deposits, withdrawals in current accounts, it's 50 lakh, and purchase of immovable property, it has 30 lakh, and cash payments of credit card is 1 lakh, and any other mode, it is 10 lakh, and payment of goods and services in cash is 2 lakh. And we have this demonetization period. If anyone has deposited this threshold, more than these threshold limits, they have to disclose as a SFT. Now the question arises, at the beginning of the session I told like they are running parallelly. Now the question arises like, is there anyone superior and supersedes? No. Like assume like there is information as per AIS is 100 and traces is 75. Now in this situation, the taxpayer has an option to rely on traces, and he can proceed to assess and make payment of these taxes as per the press release released by the CBDT. Now, so like if the taxpayer of the view like I don't want to go to Form 26 AS, there was something wrong with the information as per AS, so I want to correct it, he can go for facility. Now some of you may get doubt like what would be the wrong. The few examples are like a POS transaction. The Mr. A, let's go back to our example. Mr. A, he might be having a POS machine and he is giving to others like just to facilitate them. Now all that receipts of that person will be treated as his income. Now he can correct that, he can submit. Or you can go for long-term capital gains, which are on which there is a long indexation benefit, etc. And the feedback options are like this. Whenever we want to submit a feedback, there are five options. One is, I'll tell like my information is correct. The second option is, my information is correct, but not fully correct. And the third option is like, the PAN, there was something wrong with the PAN number. Or fourth one is like, there is a repetition or a duplication of like information. And the fifth one is like, I'm saying this is not at all my income. So we are denying that. So coming to the conclusion part, and this AIS, the main objective of the AIS is to provide all the information at a one single go, and because to save the time of the both professionals and taxpayers, and you know what, you need not to go anywhere. This will be a common point for all this, and to encourage the disclosure to the government. And through this AIS, we have an option to give feedback currently, and this may replace the entire system in future, and you know the tax filing efforts maybe get to minimal. And here I end my session. Thank you, everyone.
Thank you, Sunil. Our next speaker is Mr. Shrey Nimani, a CA final level student. He has won the Best Paper Presenter Award at Ahmedabad CA Students Conference in 2019 and at the Raipur Students Conference in 2019. His topic for the presentation is taxation issues related to e-commerce and equalization levy. Over to you, Shrey.
Hello. You all know what? Once a wise man rightly said. Once a wise man rightly said that it takes more brains and efforts to make and draft the income tax laws than it does to make the income itself. That's why I say that the hardest thing in the world to My name is Shrey Nimani and I am from Chennai, Tamil Nadu. Thank you, Sikas Ernakulam, for having me here. Today, I'm going to discuss on a very important and quite an interesting topic, which is from exam point of view and from practical point of view, which is taxation issue relating to e-commerce and equalization levy. So let me begin my discussion by asking you all a very simple question, for which I would be requiring a simple answer from you all. So, how many of you all have cursed YouTube when they randomly pops up a YouTube advertisement video like Zomato, Swiggy, because our whole focus would be on 5, 4, 3, 2, 1, skip that, rather focusing on the advertisement. Have you cursed YouTube advertisement videos? Can you raise hands? Yeah, I would say everyone would have done that. So one fine day, I had a virtual conversation with YouTube in my dream. And I told him, YouTube, you know what? We're quite annoyed, irritated by insane act of throwing advertisement video in each and every video which we stream on YouTube. Against that, YouTube replied, Shrey, what can we do? What can we do? Through advertisement, we earn revenues. It's our bread and butter. If no advertisement, no revenue. Through advertisement, we fill our tummies. I asked YouTube, oh, so your core revenue is from advertisement? YouTube replied, yeah, Shrey, we earn crores of revenues from this advertisement, and not just only me. I have my own siblings such as Google, Facebook, Instagram, even they are the same kind of business and they earn same revenues. Okay, thank you for disclosing your so-called income. Just I have last two questions for you, YouTube. How much tax do you pay in India? And by the way, where do you work? Like, do you have any muds and bricks type of low so-called lavish offices? Against that, YouTube replied, Shrey, we don't have that so-called mud and bricks type of business. We work through optical fibers, servers, and we do have engineers. And about taxes, it's privacy. We can't tell about that. Okay, hope you enjoyed the conversation with me and YouTube. So today, with the advancement in the technology, one can see lots of new business models are being evolving. And through that, I mean that one can manage or conduct a business even without regard to national boundaries. So what I'm trying to convey is that today one can see a dramatic shift in the way of doing the business, from physical way of doing the business to digital way of doing the business. In turn, these models rely more on optical fibers, telecom networks, servers, and whatnot. And in turn, they do not require any physical base or fixed place of business. So, but this type of new business models has created lots of tax challenges. Let us discuss few of them. So first challenge is with respect to difficulty in locating transaction, because everything is taking place online, so one cannot locate a transaction. There's no any face-to-face business interaction, so it is very difficult to locate the transaction. Second, knowing about the taxing jurisdiction. One cannot know about taxing jurisdiction because which country has right to tax? Source country, resident country, or the country which has the servers. Third, identifying the taxpayer for income tax purposes, like on whom the compliance burden should be rested on. And fourth, the existing based PE rules, income tax laws are not sufficient to tax this type of new business models. And hence, because of these new business models, there is a situation of tax leakage. Tax leakage means the government is losing huge amount of tax revenues from this type of transaction. Now, let us understand through an example why there was a need for the government of India to introduce a new type of levy, a new type of taxation under the ambit of taxation. So, and through this example, you get a fair idea on understand the purpose or the need or the want of the government of India to introduce a concept by the name equalization levy. So, say for example, there is a company by the name ABC Private Limited, which is engaged in the business of producing and distributing movies. So, it produces and distributes movies. Now, it's coming up with a new project, a new movie, for which it requires advertisement for better use of audience. And hence, it approached Facebook Incorporation, which is known as Meta Incorporation. So, for this transaction, Facebook charges 12 lakhs. Now, in a whole transaction, the service provider is non-resident Facebook Incorporation, and the service recipient is ABC Private Limited, a resident company. Now, you all FCAs here can just pass a journal entry in the books of account of ABC Private Limited for this transaction of 12 lakhs, assuming it is a revenue expenditure. Can anyone? I would be more than happy if someone stands up and say the journal entry of this 12 lakhs. Can anyone? Okay, yeah. Yeah, thank you so much. Yeah, so it was correct. So what the entry would be, advertisement account to bank account, then there will be transfer entry of profit and loss account debit to advertisement account. So in the statement of P&L, you will see debit item of 12 lakhs. And if at all you're aware, as per section 37 of the Income Tax Act 1961 states that any expenditure incurred wholly or exclusively for the purpose of business or profession would be allowed as deduction. So in the IT memo of ABC Private Limited, they won't add back or they won't disallow the 12 lakhs. Hence, they will enjoy the tax benefit to the proportion of 12 lakhs. On the other hand, Facebook Incorporation, which is receiving this income as business income, whether they would be liable to pay tax in India for this business income, let us analyze. As per Section 90 of the Income Tax Act 1961 states that a non-resident can be governed or chosen by income tax laws or treaty, double taxation hours agreement, whichever is more beneficial to them. And if at all you're aware, you might know that the business income of a non-resident is taxable in India only if at all they have P in India. And to your surprise, Facebook Incorporation doesn't have any P in India. Now, what I'm trying to convey is that the government was a real loser. Here, ABC Private Limited was claiming tax benefit. Here, Facebook Incorporation, which government of India doesn't have any right to tax them because of the existing tax laws. And hence, the government was losing from both the angles. And hence, there was a need to do something. So, there is an intergovernmental organization by the name Organization for Economic Cooperation and Development, precisely known as OECD, which works on economic stimulation, world trade, and recommends tax policies. Under its BEPS project plan, Action Plan 1 deals with respect to this type of transaction. In that, it had recommended few of the measures. You can go for withholding tax provision, or significant economic presence, or equalization levy. And hence, India has taken a step to introduce equalization levy through Finance Act 2016, which was introduced by our late former Finance Minister, late Shri Arun Jaitley sir, in Finance Act 2016. Okay, hope you all enjoyed the base, because creating the base was very important for me, assuming students are from CA Intermediate, because these portions are being covered in CA Final, so you might not see in the CA Intermediate, okay? Now, having created the good base of why and when of equal, let us deep dive into the core technical area of what is all about equal. So basically, there are two types of equal, two categories of equal 1.0 and 2.0. Now we are discussing on equal 1.0. So I have divided my discussion into three parts. First, we'll be discussing about qualifying person, second, qualifying services, and third, we'll be discussing exclusions. First, qualifying person. So equal 1.0 is applicable when, equal is applicable when a consideration is being received or receivable by a non-resident from a person residing in India, carrying on business or profession, or a person, a non-resident which has a P in India. So these two persons are being covered under the ambit of qualifying person. Second, qualifying services. So basically, three services are being included. First, a normal online advertisement services. Second, if a non-resident provides a space, just a small space for advertising services, even that will be covered. And third, any services with respect to online advertisement services would also be covered. Now, if at all the conditions of equal 1.0 are satisfied, then at the rate of 6%, equal would be applicable. Now let us discuss some exclusions. So basically, there are certain exclusions are being provided under equal 1.0, thereby even if a transaction gets covered under the ambit of qualifying services, still no equal would be applicable. Let us discuss them one by one. First exclusion, whether payment is being made for qualifying services to service provider is not for business or profession. That means if you avail any services for your own personal purpose, then equal 1.0 would not be applicable in your case. Second, which is very most important exclusions, which states that where the aggregate payment in a financial year, during a financial year, not previous year, during a financial year, does not exceed ₹1 lakh, then no equal would be applicable. So say for example, you are running a business or profession and you avail some qualifying services from Google Incorporation, and if the bill amount is ₹80,000 in a financial year, then no equal would be applicable. But if at all your bill amount is 1,50,000, then equal at the rate of 6% would be applicable on a whole of 1,50,000. And third exclusion, which is called obvious exclusion, I would say, which states that a non-resident service provider has a P in India, then he would not be should not comply with the equal 1.0, because if at all a non-resident has a P in India, then he would be paying taxes on the business profits as per normal tax rates under income tax laws. Now, having been understood the equal 1.0 provisions about the qualifying person, qualifying services, and exclusions, let us discuss some few case studies which I have brought in for you. Because as a CFA student, I feel that how much ever you study, if you don't put pen on paper, you will not able to crack the examination. So having clarity through case studies will help you a lot. So I'll be reading questions for you all, and I will be preparing answers from you all. So I'll be reading questions. So, first case study, Mrs. Srijesh Private Limited, a trading company located in Trivandrum, engaged in the business of selling hockey sticks. It has entered into following transaction with non-resident entities during FY 2021. So there are two transactions. It paid rupees 4 lakh to Mrs. Neil Incorporation, a USA-based company, for online advertisement of its product. Mrs. Neil Incorporation does not have any P in India. Second transaction, it paid rupees 1 lakh to Mr. David, a non-resident individual, against providing digital space for online advertisement for its products. This is a tax implication. So I would be requiring for any audience, so can you just answer the question for both the transaction? Anyone? Like just analyze, just go to qualifying person, qualifying services and exclusions. Just these three steps would help you to answer these questions. Anyone? Okay, no issues. Okay, I'll just say the answer. So first transaction it paid rupees 4 lakhs. So 4 lakhs means it's exceeding rupees 1 lakh. So it is not covered under exclusions. And second, it is paying to non-resident service provider. So it's coming under qualifying person. And third, it is under qualifying service also. So under transaction A, equal would be applicable at a rate of 6%. But the second transaction, if we see, the amount is 1 lakh, which is covered under exclusions. As I said, the amount should be greater than 1 lakh rupees. If it is less than or equal to 1 lakh, then no equal would be applicable. So in this case, equal would not be applicable in your case. Now, case study 2, which I would be requiring you to answer, please, okay? Miss Priya Warrior, a leading film artist from Kerala, known for her wink, decides to get married, and hence for the purpose to find a suitable and matching groom, she approached Meta Incorporation, a USA-based company, for the online matrimony advertisement. She paid rupees 12 lakhs to Meta Incorporation for the services. Discuss the tax implication. Please, Priya Warrior, I would say that it's very famous in Kerala, so I thought to take. Anyone? Yeah. So it's exclusively covered under exclusion. So it won't be covered even if the amount is more than 1 lakh, even if it's covered under qualifying services, but it is for personal purpose, so it equal would not be applicable. So guys, this was all about equal 1.0. By the way, first thing first, the provisions of equal are not given under Income Tax Act 1961, but it is brought in through Finance Act 2016. So after my discussion, you go home, please don't start searching Income Tax Act, you will not find it, okay? And it's been given under Chapter 8 from Section 163 to Section 178 of Finance Act 2016. Now, you know what? Once a wise man rightly said that today, the Indian government's view on the economy could be summed up in few short phrases. If it moves, tax it. If it keeps moving, regulate it. And if it stops moving, subsidize it. Okay, in which ways, you all will agree with me that post-pandemic, the digital economy has played a key role in sustaining the economy in 2020. And for sure, it will continue in future also. And therefore, the government of India found it beneficial to tap the business of e-commerce for garnering additional tax revenues. And therefore, because this was one of the sector which was less affected by the crisis. And therefore, our Finance Minister, Ms. Nirmala Sitharaman ma'am, has substantially extended the scope of equal by including e-commerce operator under the ambit of equal. Now let's deep dive in the core technical area of equal 1.0, 2.0. Okay, so I have divided my discussion into 4 parts. First, we will be discussing on the chargeability. Then we will be discussing on the important definition, what do you mean by e-commerce operator, then e-commerce supplier services, and at last exclusions. Okay, first coming to trigger point, the chargeability. So equal 2.0 is applicable when a consideration is being received or receivable by an e-commerce operator from e-commerce supplier services to either to a person resident in India or a person who buys goods or avails services using an IP address located in India or non-resident in certain circumstances. If you see first thing, a person resident in India, unlike in 1.0 where the words being used as a person resident in India carrying on business or profession, here the words business or profession are not given. Means even a personal purpose or own purpose would be covered here. Second thing, I would say this, with no stretch of imagination, I can think about this transaction. What it means that if a person is in Japan, buying some goods or avail some services through an IP address located of India, it would deemed as a transaction has taken place in India. I don't know how that IP address will reach first Japan, but they have included, law methods have included that. Okay, now we'll discuss on the, what do you mean by e-commerce operator? An e-commerce operator means a non-resident who either owns, operate, or manage an online facility or platform for online sale of goods or for online sale of services or both. If you keenly observe the definition of e-commerce operator, they have included all the permutation and combination under the ambit of e-commerce operator. That means even if it owns, operate or manage, it will be covered. Second, e-commerce supplier services means That means online sale of goods owned by the e-commerce operator, online provision services provided by e-commerce operator, online sale of goods or provision services or both facilitated by e-commerce operator, or any combination of one to three above. And if at all the conditions of equal 2.0 are satisfied, then equal at the rate of T 2% would be applicable to you. Now let's discuss some exclusions. First exclusion, which states that where equal is level at under equal 1.0. If at all a transaction gets covered under equal 1.0, then the transaction will not cover under equal 2.0. That's quite obvious. Second is very important exclusion, which says that the equal 2.0 provision needs to be complied by an e-commerce operator only when its sales, gross receipts or turnover during a financial year is more than or equal to 2 crore rupees. If at all this Amazon.com has 1.98 crores as sales or gross sales during the financial year, then the provisions with respect to equal 2.0 would not be applicable to it. Third exclusion, which is very similar to equal 1.0, states that if an e-commerce operator has a P in India and the services are directly connected to such P, then the provisions of equal 2.0 would not be applicable to it. Now I have taken one December 2021 question which came in this exam question. So I would require you to answer. MissPeterParker.com, an e-commerce operator incorporated in USA, which has no physical presence and neither permanent established in India. It has entered into following transaction during FY 2021. It sold goods worth rupees 1.2 crores to Indian residents. It sold goods to person resident of USA. Those goods are purchased by using the IP address of India, amounted to rupees 70 lakhs. Discuss the tax implication. Whether tax will be applicable? Anyone? You can take 20 seconds. I'll just give you a hint. It's covered under exclusions. If you have gone to exclusions, just see the total amount of the transaction. 1.2 plus 70. So it is not exceeding or not more than equal to 2 crores. Hence, PeterParker.com doesn't have to comply with the provisions of equal 2.0 because it is not exceeding 2 crores. Okay. Now, having discussed separately the equal 1.0 and 2.0, let us consolidate some important points of both the things. First, is respect to applicability. So, equal 1.0 is applicable on transaction with respect to online advertisement, but 2.0 is applicable on transaction with respect to online sale of goods or online provided services. Second, rate of equal. Under 1.0, it is 6%, under 2.0, it is 2%. Third, threshold limit. Under 1.0, it is more from buyer's point of view, that is transaction wise. If it is more than 1 lakh, then equal 1.0 would be applicable. But if you see in 2.0, it is more from the e-commerce operator point of view. If the sales, turnover, gross receipts is less than 2 crores, then equal 2.0 would not be applicable to him. Fourth, compliance obligation. Under 1.0, the compliance obligation is being vested on service recipient. And under 2.0, the compliance obligation is being vested on service provider. That means today, Amazon.com in USA have to take PAN and they have to deposit. So the compliance obligation is being vested on e-commerce operator. Now, in the recent budget 2021, as such there were no amendments, I would say, but yes, there were some clarifications from Finance Minister Ms. Nirmala Sitharaman, she clarified some of the points, so which are being represented by the stakeholders like us. So let us discuss one by one. First clarification, it states that if a transaction is that on which the provisions of royalty or FT is applicable and even the provisions of equal are applicable, then the provisions with respect to royalty or FTs would prevail. So say for example, there is a company by the name ABC Incorporation in USA. It provides online training services to an Indian company. Now in this, FTs also are also applicable and equal 2.0 will also be applicable because online sale of goods. So they have clarified that equal 2.0 would not be applicable, but royalty or FTs would be applicable. Second thing, they have substantially added plethora of activities under online sale of goods and online sale of services. That means even if you accept an offer, place an offer, or you even pay on the online platform, even that would be covered under online sale of goods or online sale of services. Now let us discuss some key issues under equal. First, there's no clarity on the meaning of digital or electronic platform. So due to absence of the definition on these two terms, because it's very ambiguity in the scope of equal. Second, ambit of e-commerce operator, owns, manage or operate. Just for example, if the owner is different, operator is different and this manage is different, then for a single e-commerce operator, that could arise 3 persons. So hence, a clarity is required from that end. Then this compliance obligation on non-tracing e-commerce operator. So basically, what do you think this? Okay. Sorry, I'm exceeding time. Okay, I would like to conclude my speech by saying few lines. I would say, in life, it is difficult to become a successful chartered accountant. In life, it is difficult to become a successful chartered accountant. But more than that, the most difficult task, the most difficult thing in life is to become a man of values or a man of good person. So I would urge you all, including myself, that we should work hard to achieve both of these tasks in a given life tenure. Thank you so much for patiently listening. You all are such a great audience. Thank you so much, Kerala.
Thank you, Mr. Shrey. The next speaker is Ms. Fatima Nawla. She is a CA final student pursuing an articleship in Bari and Associates, Kozhikode. Her topic for the presentation is TDS and TCS on sales. Over to you, Fatima.
Good morning, everyone. Before starting my session, I would like to inform you that there is little mistakes in my presentation on the magazine, so kindly please don't mind it. Have you ever thought of implementing TDS on purchase of goods? Okay. Have you ever thought of implementing TDS on purchase of goods? Not at all. But it happens for the first time in the history of income tax. When, for what, and how? Let's see. So ladies and gentlemen, this is Fatima Nawla to speak on topic TDS and TCS on sales. That is section 194Q and 206C1H. We all know about TDS and TCS. TDS is a mean of collecting tax on income, dividend, asset sales by requiring the payer to deduct tax before paying the balance to the payer. And TCS is the tax payable by the seller, which he collects from the buyer at the time of sale. Now, with a view to widen the tax net, Indian government has extended the scope of TDS and TCS. Then the Finance Act 2020 and 2021 introduced two sections called Section 194Q and 206C1H. So let's find out what is Section 194Q, TDS on purchase of goods, and Section 206C1H, TCS on sale of goods. Section 194Q, TDS on purchase of goods, with effect from 1st July 2021. As per the provisions of Section 194Q, every person being a buyer who makes payment for purchase of any goods of value or aggregate of such value exceeding 50 lakh rupees shall, at the time of payment or at the time of credit, whichever is earlier, deduct TDS at the rate 0.1% on the amount paid or payable exceeding 50 lakh rupees only on satisfaction of some conditions. So the buyer should satisfy some conditions to deduct TDS on purchase of goods. And the conditions are: first condition, turnover or gross receipt of the buyer from his business shall exceed 10 crore rupees during the immediately preceding financial year. And the second condition is, purchases made from a single seller shall exceed 50 lakh rupees during the current year. So these are the basic conditions of section 194Q. So if these two conditions are satisfied by a buyer, he shall deduct TDS at the rate 0.1% or 5% if he does not furnish his PAN or Aadhaar. So as I said, according to section 194Q, TDS is deducted on the amount paid or payable exceeding 50 lakh rupees. So what if advance payments are made? If advance payments are made, TDS is deducted on the whole amount of advance paid. And another circumstance is in case of purchase return. So if goods purchased are returned by the buyer, the TDS already deducted under this section may be adjusted against the next purchase from the same seller. So these are two different treatment for different circumstances under section 194Q. And the analysis of section 194Q is here. During the financial year 2020-21, if the turnover of a buyer is greater than 10 crore, and in financial year 2021-22, that buyer purchased from a single seller for an amount greater than 50 lakhs. Then in the financial year 2021-22, the buyer shall deduct TDS at the rate 0.1% on sum exceeding 50 lakh rupees exclusive of GST at the time of payment or at the time of credit, whichever is earlier. Since section 194Q was introduced on 1st July 2021 and is applicable from that date, even though purchases made from a single seller for the period 1st April 2021 to 30th June 2021 will be considered for determining the threshold limit of 50 lakhs for the financial year 2021-22. But the TDS is deducted only on the purchase made on or after 1st July 2021. So on or after 1st July 2021. Here I'm talking about TDS treatment under section 194Q during the current year. So I would like to give you an example for better understanding. So let's imagine this school guy is my friend Sriniman. Is that okay for you? Thank you. Having a turnover of 25 crore during the last year. And he purchases from Sunil, another businessman, for an amount of 50 lakhs on 30th June 2021 and for 15 lakhs on 1st July 2021. So the goods purchased by him in the current year exceed 50 lakhs, which include both 50 lakhs purchased on 30th June 2021 and 15 lakhs purchased on 1st July 2021. Therefore, he is liable to deduct TDS at the rate 0.1% on the excess 15 lakhs only on purchase made on 1st July 2021. So we don't need to deduct TDS on purchase made before 1st July 2021. So in brief, this is what section 194Q. I hope this is clear for you all. Next, moving on to the second part of my session, section 206C1H, TCS on sale of goods. This section was introduced on 1st October 2020. And as per the provisions of section 206C1H, every person being a seller, in 194Q, we said being a buyer. Here it is seller who receives any amount of consideration for sale of any goods of value or aggregate of such value exceeding 50 lakh rupees shall, at the time of receipt of such amount, collect from the buyer TCS at the rate 0.1% on sale consideration exceeding the 50 lakh rupees. Only on satisfaction of some condition. So here also there are some conditions to satisfy by the buyer to collect by the seller to collect TCS from the buyer. And the conditions are: the sale consideration received by the seller from a single buyer shall exceed 50 lakh rupees during the current year. And as in section 194Q, the turnover or gross receipt of the seller, here it is seller, shall exceed 10 crore during the immediately preceding financial year. And then the last condition is, the buyer of goods shall not include central government, state government, embassy, high commission, etc., or a local authority, or a person importing goods into India, or any other persons as notified by central government. If these three basic conditions are satisfied by a seller, he shall collect TCS at the rate 0.1% from the buyer, or 1% if he does not furnish his PAN or Aadhaar. And during the financial year 2020-21, the seller is liable to collect from the buyer TCS at the rate 0.075% due to COVID-19 relaxation scheme. And the analysis, if I am a seller and during the financial year 1920, I have a turnover from my business for an amount exceeding 10 crore, and in financial year 2020-21, I received from a single buyer a sales consideration exceeding 50 lakh rupees, then I am liable in the financial year 2020-21 to collect from the buyer TCS at the rate 0.075% on the sale consideration exceeding 50 lakh rupees at the time of actual receipt of such consideration. So this is section 206C1H TCS on sale of goods. Next, I have a question whether TCS under section 206C1H is to be collected on receipt of sale consideration above 50 lakhs, or TDS under section 194Q is to be deducted by the buyer on purchase of goods exceeding 50 lakhs. So let's see what will be the treatment if there is a clash between section 194Q and 206C1H. If a transaction is covered under section 194Q as well as the provisions of section 206C1H, then the TDS under section 194Q will apply. So we don't need to consider section 206C1H in such case. So the priority is for section 194Q. However, if for any reason tax has been collected by the seller under section 206C1H before the buyer could deduct TDS under section 194Q, then such transaction would not be subjected to tax deduction again by the buyer. So the point to be noted here is, if TDS is deducted under section 194Q for a transaction, then such transaction would not be subjected to collect TCS under section 206C1H. So before going to my conclusion part, I would like to analyze both of the section. So the buyer's perspective under section 194Q. If the buyer's previous year turnover is greater than 10 crore, and the answer is yes, and if the purchase and his purchase from a single vendor is greater than 50 lakhs, and if the answer is yes, we'll have the next question, whether the seller is liable to collect TCS under section 206C1H. And if the seller is liable to collect TCS under section 206C1H, then the buyer shall give a declaration to the seller for TDS, so that he does not collect TCS under section 194Q. And mandatorily, the buyer is liable to deduct TDS at the rate 0.1% or 5% as applicable. And if the seller is not liable to collect TCS under section 206C1H, then the buyer shall deduct TDS at the rate 0.1% or 5% without giving any declaration to the seller. And next, seller's perspective under section 206C1H. If the seller's previous year turnover is greater than 10 crore, yes, and he received consideration from sales to a single customer which exceed 50 lakhs, and if the buyer is liable to deduct TDS under section 194Q and the seller receives a tax declaration from the buyer for TDS, then there is no need for seller to collect TCS under section 206C1H. But if the buyer is not liable to deduct TDS under section 194Q, then the seller is liable to collect TCS under section 206C1H at the rate 0.1% or 1% as applicable. So these two sections introduced in the Finance Act 2020 and 2021 is very important to establish the trail of high value of transaction of sale and purchase of goods. And it's the responsibility of every resident person to collect or deduct tax according to section 194Q and 206C1H. And as we know, paying tax is not a punishment, it's a responsibility. I know presenting both of these sections together is a little confusing, but I hope I can get you an overall idea of both of these sections. So thank you all for your patient listening and all the very best. And I advance Happy New Year.
Thank you so much. That was our last speaker for the session. I invite our session chairman for any remarks or evaluation.
I think I should begin first by complimenting all the three speakers. Three different subjects, rather confusing subjects, I would say. Not easy to understand, but see the way the technology has improved. Had it not been for this PowerPoint presentation, I'm very sure that nobody would have been able to present in this such lucid manner, at least for you to have a general idea what it is. The second point I must compliment the three speakers is that, in spite of we having started about 20 minutes late, we have still managed to finish the session maybe 5-10 minutes later than the scheduled time. I think all the compliments to three of you, all compliments. Now, having listened to the three speakers, do you agree with me that the common thread which I said at the beginning is what is connecting all the three? See, if you learn from that aspects, then it becomes much easier to understand the law. Now, what you learn, what you take it over from here? You as students, what is your primary objective? Your primary objective is to write and pass the examinations. So you understand the law as a student and not as an expert. If the same topic, you come and sit in one of the Chartered Accountants conference, you would find questions and interpretations going all around the way. You don't get confused with that. Your job, and I always remember the words of my teacher, Sri P.P. Gururaj Upadhyaya. Gururaj Upadhyaya was a leading tax practitioner in Chennai when I was a student under him. Morning 10 to evening 5, he'll be in the income tax office or the commissioner's office or the income tax tribunal, arguing cases for his clients. 5:30 to 8, he will come for the students' classes, final students' classes, come down to our level and start talking to us as students. And I had the habit of reading this ITRs and all those days itself. I used to ask him questions on interpretations. He said, look, my dear, if you start interpreting, you will not pass the exam. Please understand the examiner doesn't have your knowledge. So what you should start learning is that you learn the law as it is and don't get into interpretations and look at it in a manner that you are able to reproduce in your examinations. That is the first and foremost. Even when you get into the case studies and all, what you should be looking at, because if you look at the examination questions, etc., you are not expected to give your expertise there. It is more of your knowledge of the subject. Because you are no client is going to come and ask you what is the interpretation and how I should be, except probably on the AIS, some of our friends or your parents or some uncle might call and ask you what I should do as a student. Because he doesn't want to pay to the chartered accountant, he will definitely be asking you. The other two subjects are definitely not, you are not called upon to answer anything as an expert. So your limited knowledge would be to reproduce it, especially if you look at the equalization levy and the e-commerce operations, etc. It is, even with this presentation, this 20-minute presentation, I was getting confused a little bit. But you can imagine how if you are to learn only from the books and then reproduce it. Sections are different and sections are bound to be that way. And I would compliment all the three, though the second speaker exceeded a time limit a little bit, but that is probably because of the vastness of the topic that he was dealing in. Otherwise, all of them were very, very brevity in their presentation, were able to carry what they wanted to exactly convey to the students here. Now, I would like to conclude by saying 5 one-liners. Once all villagers, all the people in a village decided to pray for rain. And on the day of the prayer, only one child came with an umbrella. That is called faith. You throw up a small child up in the air, it laughs. It doesn't cry.
Fatima Nawla. I invite the Secretary of Ernakulam branch of Sikasa of ICAI, Ms. Shimi Shaji, to present a token of appreciation to our session chairman, CAPM Veeramani sir. Now I invite our treasurer of Ernakulam. Okay. I invite the treasurer of Ernakulam branch of Sikasa of ICAI, Ms. Purnendu M. Nair, to deliver the vote of thanks.
Good morning, everyone. Today I've been bestowed with the opportunity to propose the vote of thanks for the direct access session. I would like to start by thanking our session chairman, CAPM Veeramani sir. Thank you, sir, for your insightful words. And from now, I think we will all think of you every time we Google something. And next, I would like to thank all 3 paper presenters, Sunil, Shrey, and Fatima, for coming all the way to Ernakulam just to present for us. I hope you all noticed none of them are from our branch. So a huge thank you to all of you. And however few in number, a big thank you to all audience members who took the time to be present here this morning. Once again, thanking you all.
We'll now disperse for a tea break of 10 minutes. Tea and snacks are arranged outside the hall. So we'll come back exactly in 10 minutes. That is by 11 to 11:20. 11:25, yes. All the students of Geology Technologies. He joined the company in the year 1998 and has spearheaded its transformation into a technology-driven retail financial services intermediary with several pioneering innovations to enhance the client's trading experience. He is a holder of numerous awards like the Manager of the Year Award in 2011 and 2013. We are honored to be in your esteemed presence, sir. Now I invite our chairman, CS Saleem Abdul Rashid, to speak a few words.
Good morning to all. After a wonderful session on the direct tax, now we have a motivational session. Actually, sir, in our profession, most of the people are from the middle class family. Those who are very studious only, they are getting the chartered accountancy course. Once they enter into this course, they have a lot of opportunity to give their and motivate themselves. One of the platform is the Students' Conference. Today's speaker is a well-known person from the Geojit. Let's welcome with a big round of applause our today's speaker, Balakrishnan sir. Over to you, sir.
Good morning, all. At the outset, let me express my gratitude to the Students' Association and the Ernakulam Chapter branch for inviting me for this prestigious conference. I am not sure whether I am the sought dignitary for you, but I am not a chartered accountant. Let me tell you that I am not a chartered accountant. And I am not a motivational speaker. What exactly I am going to do here is my experience, just around 30 years of my service experience. Mr. Saleem said most of the students are from middle class. My request to you is forget about in which class you belong to. See, today we are here to create a career in our profession. So let us be a professional, nothing more than that. So I wish all the students very best for a wonderful learning sessions and also the career. So my experience with the chartered accountants also I'll share, and probably in my age group, we are a particular kind of a people. We connect to two types of generation and technology. Let me express you that the technology today we have seen is the outcome of the telecom emergence. So when I started my career, that was in '89, when I joined in Keltron. Keltron is the electronics manufacturing company in Kerala. At that time, very little options available. So I joined as a programmer trainee in Keltron. And the telecom situation of our country was very bad. Then subsequently, I joined in National Informatics Center, which is today, probably all of you know that it is NIC, giving computing facility for the government of India and state governments and various departments. So my job was to connect all the high courts of India. So there I realized that it is extremely difficult to connect because telecom was not available. And then subsequently I realized there is something called satellite technology. Then through VSAT, we used to connect. And it is a high latency data network, and that was my first job on a telecom. Then, in 90s, what happened to India was India opened up. The real globalization started. So we throw away all government jobs, went into private sector. I joined in an electronic city company in Bangalore, then moved to Cochin. And then I started my own, and that is how I landed in Geojit. And so that is my basic story. So why I am associating with the telecom is, today we are actually living in an information age. And we are basically the product of knowledge era. That was not the case before. So people like me have both the things. One is actually before this information revolution, we started our career as most like at the very younger age, and then migrated to this information era. And today we are managing certain kind of a thing with the help of chartered accountants. That is actually the migration path. Then when now the most important path is actually in Geojit Financial Services. And when I joined, the company had around 75 people, very small organization in a single floor, around 3,000 square feet area in MG Road. That was the organization. And from there, we started, my job was to expand and create more branches, connect all the branches, create an information base, basically creating a database, and management systems. This was my job. There probably, all of you are learning now lot of things. For example, you are, as a part of curriculum, you may be learning the data integrity or how a financial system works, and the accountability, traceability, etc. This all, but all these things were unknown to us at that time. So when we started nearby cities or small towns, the branches, there was no option to connect. So there was something called a data storage device called the floppy disk. I am sure no one has seen this. Floppy disk is in which you can store the data. And then we give it to the private bus driver and send it to the nearby branch. The return floppy will come from another bus. We update the systems. So that was the first kind of a network. You cannot imagine the data sharing today like that. It was actually to an unknown entity. We used to share the data in a medium which is retrievable and send it to the other location. There somebody will collect, put it in the system, and then remaining data will take back and come over here. And that was a kind of a network we had in the mid-90s. 2000, probably, I am sure all of you have born students must be after 2000 or at, so that is why all of you are called millennials. At 2000, there was an internet revolution. The entire thing has changed. You can freely transport data, and then thereby you create huge knowledge base, and that is how this information era has come. Now, that is why my life is also, the telecom revolution created a growth path in my life. Similarly, all of you, when you go ahead with your career, what is going to happen is technology plays a major role. Technology will change everything. So we have to be adaptable. We should know how the technology changes. In 95 onwards, I used to file returns. The return filing was a tedious process at that time, extremely tedious process. And it was a horrifying time at that particular point in time. Getting a PAN card It was a privilege at that point. Oh, you have a PAN card, and getting it was a great thing. So that is how the evolution has started. Another thing is, when we grow in the corporate world, see, there are two types of career path for you. One is you can actually create a ladder in your corporate world, can reach up to CFO or a managing director or somebody like that. Or you can practice, like Mr. Saleem, you can actually, when you practice, you are also a consultant to many organizations. You are not only practicing finance or something like that. Today, you can actually create an independent finance department or independent. It is completely linked. Any decision, any operational decision, strategic decision, or any kind of a decision, even information technology decision, first it should go to the financial impact of it. So we also have many chartered accountants in our firm today. Today we have around 3,000 people, multiple locations. We have joint ventures outside. We also have international shareholders. So the way in which the organization evolved and the role of a chartered accountant is beyond the imagination of as a tax practitioner or a tax advisor or financial bookkeeping or something like that. He or she has a strategic role to play, which is beyond the imagination of your curriculum. That is where actually one should achieve the ability to manage things. Even if it is not directly related to finance or taxation or economic impact, ultimately the strategy which we work on will have an overall impact on your probably the valuation or the company's reputation, all those things. So in that particular case, a chartered accountant plays a crucial role in any organization. He has not only the managerial role, he is also have an advisory role. When when I actually took over the technology division of Geojit Financial Services, then we started expanding. We created data center. We started buying huge servers because this is a transaction industry. Every time when I actually create a purchase request, which will go ultimately to the CFO, who is always a chartered accountant, then he'll ask a question. I was wondering why he is asking, how long this will we can use. Then on a computer at that point in time, it would be very difficult to predict because tomorrow, next year, Intel will come out with a new processor. So this will become obsolete. Your operating system will become obsolete. Your utility software will become obsolete. So I understood the depreciation mechanism which he was gone through. So always we had a fight. There are interesting stories on such fight. Then I also learned, this is the way we should look, how much leverage we can do from an investment. That kind of a learning we got actually from a chartered accountant. Initially, I thought he is an enemy for any kind of a development, but ultimately I realized that it is not. Actually, he is making a point in terms of how effectively we can utilize. Today, in any organization, efficiency is very extremely important. No one is really bothered how many people you have, but how much you can do. That is very important. That is why you have a lot of things. Probably you may be learning new things like artificial intelligence, machine learning, robotic processing. All those things are coming in. When that comes, the productivity will change. The measurement of productivity will change. When you measure traditional way of productivity, probably in an So I can produce X amount of output. That is actually the productivity of myself. Today, with the tools and the services available from third-party sources, my productivity will exponentially grow. So the measurement of the productivity is totally different. All these things over a period of time, the whole thing has changed. And especially last 2 years, in 2020 and 21, made a fantastic change in the way in which we execute things. See, we are in capital market, which is high-risk products and investment product. Normally, our customers are upper middle class or those who have investable surplus. Otherwise, they can't come into this high-risk products. So those who have surplus income and they come in the capital market for additional returns. In such cases, it is extremely risky to have work from home environment. So the problem is you are sharing a lot of data to somebody's home, even if he is an employee. There are actually lot many new technology evolved, how to protect your data, how to protect somebody's profit and loss statement, how to protect your profile data, all those things. And then what happened in the last 2 years, our corporate office in Cochin, we used to run with around 600 people. And with 40 people, we could manage 40 people on site. We provided their accommodation and all those things. And we could run in that with all kind of a protection of the data. Normally in a listed company, the problem is there are a lot of data which we cannot disclose. So data safety is also an important element for a financial officer and all other senior people. So in that context, I am not sure whether your curriculum covers all those things. Going forward, the most important challenge for anyone who is managing the data, financial data or non-financial data or even people, the profile data, whatever it is actually a greater challenge because you have a distributed workforce. I understand that this conference, 300 people are attending from various parts of our country through online channel. That is what Mr. Saleem said. That means we have a physical presence of hardly 50, 100 people, 300 people remotely logged in. They are listening this. They can record it. They can also share it. If they can record it, they can share it. So the confidentiality definition of the data has changed. This has aggressively changed during this pandemic period. So new era has really emerged during the last 2 years. And then now we are actually creating a new protection mechanism for the entire thing. Then on my experience with the finance and accounting, I used to say to my CFO then, not today, at that time, I am talking about around 15 years, your job is recording history. We are creating the events and history, you only record history. That was my understanding at that time basically because you need a transaction to account. So I am the transaction enabler. If I am not doing that, you have nothing to record. This was my understanding. It is wrong actually. There is so many things beyond that. It is not bookkeeping. It is actually we are analyzing the data. We are creating many inference from the data, financial data. See, the whole thing, today customer behavior can be analyzed. What sort of transaction, how much profit he is making, in which transaction he is making a loss, and how this loss can be prevented. All these inferences are coming from the data. Another challenge for all of you when you start working on either as a corporate professional or as a practicing person, this is going to be a major problem because your analytical skill is extremely important. Not a pattern matching, it is more of creating an inference from the analysis and predicting something. So that is very important. Everyone is seeking what will happen. Today, this is the scenario. Tomorrow, what will happen? And how can we prevent anything going wrong in our organization? What all preventive measures we can take? Or what all aggressive step we can take so that we will make more profit, or we will have more customers, or we will have more satisfied customers. These kind of questions from the CEO, from the senior management, people started asking. Unless in the past it was, okay, this is my performance, good or bad, compare with the yesterday's performance. But that is going to end, or that will be a normal thing, and the future will be what I am going to do tomorrow. So this is the difference between the heavy usage of the technology and the normal way of life. So in that context, my request to you is to understand the entire ecosystem, what is actually happening. When you learn the things, you are mostly doing with the structured data. For example, you know how to account. You know how to create a profit and loss. You know how to create a balance sheet. You know how to make ratios. And you can also interpret ratios. And you know how to make a budget. You know how to compare a budget versus actual. And you can say all that. These are all I am talking about structured data management. But what is actually happening in an organization, the use of the structured data has come down to 20%. And remaining 80% is either semi-structured or unstructured data. That is where actually we need more intelligence. Long back, Infosys in their annual report, they mentioned about the human capital accounting. Your intellectual capability, your staff intellectual capability is an important asset because we are living in a knowledge society or knowledge era. How to value that particular intellectual capability? All of you must be knowing that there is a huge discussion happening in the, there is something called the Great Resignation. I don't know whether you have read in the newspaper, Times of India, an article came, and then HBR, globally it is a discussion point. The discussion naturally started from US because from April to till date, around 19 million people resigned from their jobs. So then it is a global discussion. Now even in India also it is like that. So the key point is when somebody leaves today from the, previously an accountant is going or a programmer is leaving an organization, you can replace with somebody. The skill is minimal. What you need, for example, replacing an accountant, what you need is probably a commerce graduate who understands how to account, and you have a structured way of managing this. So that is why replacement is easy. Similarly, a programmer, it is a little more high-tech job, but a particular language which we are using and skill in that language, and his skill is basically interpret the logic into that particular language. That was enough. Today, the whole thing has changed. Because mostly we don't require an accountant, because accounting happens through a system. What we need is the people to create accounting system, create the logic. That is actually a superset of it. At the knowledge level, it is superset, not at the core or the subset of somebody's ability. In that case, what we are going to happen across the board, the availability of the people is very important with the particular kind of a skill set. That skill is extremely important. So that is why human capital has become extremely important. That is why today resignation and attrition is a discussion point, because you are losing skilled people. You are not going to lose unskilled or semi-skilled people. They will remain in the system because no one is going to take them. So it is extremely important to develop your skills. Not only beyond the curriculum. I am talking because curriculum you will getting evaluated by your examination or viva, whatever it is, and you will all surpass that. But that is not enough. Your ability is to manage the new era, which is knowledge era, and knowledge is, unlike in the past, it is getting obsolete very fast. So therefore, there is another process will come, which is called unlearning. So today I am remembering I started with the telecom, this one. If I only know the VSAT and the floppy disk technology, I would not have reached anywhere. Because there that job had gone. There is no one, today no one has seen whatever I have mentioned here. So when the new things comes up, when new technology emerges, which is actually challenging our life, mobile phone for example. I remember in 2008, we created a mobile application. So including many people, who is going to use small screen? How can we read? You can't trade in transaction in the mobile, using a mobile. At that time, it was a very small screen also. Today you have a 4-inch, 6-inch, 9-inch screens are available. But at that particular point, everyone. Then I said, okay, let us show to them because it is handy. And within a year, by 2010, it has become a standard of life. Today, if I book my coconut plucker using a mobile app. So and no one taught them how to use the mobile. So normally we have a training program when we have an application in our office. Who taught you to use a mobile application? No one. Because it is self-learning application. You know how to use the application. So the technology create a new ways of life. You can't be adamant that, okay, no, my old learning, my knowledge is important. That is important up to a certain time and for a certain kind of a period. But beyond that, these things will get obsolete. And when you're relying on technology, what is going to happen is the obsolescence rate also will increase. Therefore, unlearning is also very important. So learning is, today you are in the process of the learning process. Tomorrow what is going to happen is, you have to unlearn and relearn new things. So this is a continuous challenge for any professional. If anyone is thinking that, oh, I'll get a certificate or I'll get an award of CA or something like that, I'll get a membership of the institution, there ends my studious activity. Then onwards I am going to get a reward like money, revenue. Please don't think like that. If you are unable to unlearn and if you are unable to relearn, then you will also become obsolete. This is what is actually happening in not only for chartered accountants, even for engineers, even for computer programmers, anyone for that matter. If those who are aspirant in a career, they are actually learning, unlearning, relearning is actually the key, irrespective of the domain. When you start working on, you may be working in, somebody will go to logistics, somebody will go to financial markets, somebody may join in a bank, somebody will practice as a chartered accountant. Some of the people will become a consultant. A consultant, today you may give a consultancy for a particular pharma. Next day you will give a consultancy for logistics, something like. So your domain is variable. You will change from one domain to another domain. So the ability to change, ability to again relearn is the key factor for everyone. So whatever happened when I share my experience, let me also tell you, this is precisely what happened to my life also. Probably this kind of a curve may not happen with the many people in the future, but we started where the technology usage was very low. From there, it has become medium and it reached to high. And this is what happened to my career, where from very elementary facility, computer was a precious thing. It was only I don't know whether you heard about a room called EDP room, electronic data processing. There was something called EDP. There will be a no entry board, because if somebody entered, they can spoil the entire thing, which is air conditioned EDP room, which was computing happened. That was the case in 25 years. Today, can you imagine a life without a computer? See, all of them have laptop. Otherwise, they can't work. 15 years back, probably this similar kind of a conference, how it was done. Without a laptop, common thing probably the mic, nothing more than that. So that is where the change happened. The friend sitting here, he cannot organize anything without laptop. He can't even remember the program without a laptop. That is how it is today, it is happening. So and also, probably with the same laptop and the ability he has, he can run 3 programs simultaneously. That is the new advantage of the technology. So how to use the technology and how to forget the technology and how to learn new technology is a continuous challenge till over the end of life. That is for sure. Another point, if you have any question, I can answer. I'll also tell you a couple of other things. For example, today what is happening is a lot of new word has emerged. CapEx to OpEx. For a chartered accountant, I don't have to explain what is capital expenditure and what is this operating expenditure, which is a common word for in the IT operations in most of the business. You have a capital expenditure converting to an operating expenditure. So, see, capital item will get depreciated. This is second. So, and then the key point is you are bringing elasticity to business. That means if I am buying something, I am buying a machinery which can last for 10 years with a capacity of X amount of production, or a computer server or a machinery, whatever it is. So which is a capital item. And then what you do, you depreciate on a period, irrespective of its use, irrespective of whether it produces the X amount which is predicted, whatever way. But the cloud computing, and today not only in the computing, cloud kitchen is coming, cloud, lot of cloud is coined with so many things. What is actually cloud? Cloud we do not know where it is. We can see cloud, but we can't actually touch it. It is everywhere. You can feel it, but you can't position it. This is precisely happening in the technology era. So in that case, your usage, you pay only for the usage. You pay only for the usage. You don't have fixed cost, you only have variable cost. This is the theory. This is only theory, right? Because your agreement, finally when it comes to agreement, it is not like that. But let us take the theory part. So that means a typical chartered accountant's job today is a challenging one in any organization for that matter. How to convert, for example, when you say it is variable, tomorrow your business comes down. That means I don't have to pay that much. I don't have to account that kind of a depreciation. This calculation, though theoretically very easy, it is extremely complicated. It is extremely complicated. This is what is because we spend hell lot of money to create a data center in 2010 and subsequently upgraded to a tier 3 data center in Cochin in 2013. And then for BCP, that also you may be knowing, business continuity planning. For that, we created an alternate site, which is more or less same kind of a thing. These are sunk costs, which is whether I am using it or not, you are actually paid for it. Now, when the emergence of the cloud, what exactly happening is you don't have to do all those things, but you will come into the subscription model. So this subscription is, though it is easy to say, but it is complicated in terms of financial terms. The reason is we do not know how much we need to subscribe. No one can predict it. And second is the so-called elasticity when it will become practice. That is also a, so there is a CFO's role or a chartered accountant's role has become more responsible, and they have to work in tandem with the overall requirements. Unless in the past, what exactly happened was their job was limited to the finance department or advice or to the board or representing in the board again your financial result, etc. Those things have, of course, that will continue, but beyond that, there will be a major role to play. So that is all about my learning with the chartered accountants and technology. There are a lot of stories, but it will be boring for you. And because I had already lived 30 years in a corporate life, which is, as I mentioned, from elementary stage, very, very, very elementary stage to medium level to a listed company's advanced stage. So in this journey, initially I thought chartered accountant will create a chartered accountant and legal department. Both of them created hurdles. But later I realized the intelligent people who are there gave advance notification that this can happen. So be careful. That is the role of a chartered accountant in my belief. This is not only interpreting what you have right now, what is going to happen tomorrow. Be careful in terms of finance, in terms of operations, in terms of output. That is where actually an intelligent chartered accountant plays the role. So that is all from my side. If you have any questions, I can answer. Otherwise, I'll stop here. Thank you.
Thank you so much for the wonderful experience sharings of long 30 years. We understood from your speech that technical and soft skills are very important to our career path. Nowadays, chartered accountant and our students are very much keen about the technology, and we are adopting technology very fast. Now we are in more focusing on analytics, business consultancy, and for scaling up the business, we need more technology. We are using that in our profession and our practice also. Thank you so much for the wonderful session and sharing of your knowledge and experience for the past 30 years. Thank you so much, sir.
Thank you so much, sir. Now I invite a chairman of Ernakulam branch of SICAS of ICAI, C.S. Saleem Abdul Rashid, to present a token of appreciation for our guest, Sri Balakrishnan A., for conducting this inspiring session. Thank you so much, sir. Now we'll moving on to the next technical session. Before that, we'd like to give a huge shout out to our event sponsor, Vivo Smartphones. They've set up an experience stall right outside the conference, so be sure to check it out to get information regarding the latest mobile phones as well as the pre-booking of the latest edition. Every year, Ernakulam branch of Sikasa of ICAI, along with the Ernakulam branch of SIRC of ICAI, hosts CA Students Conference. It is one of the biggest events for CA students. Through this conference, you get an opportunity to learn valuable insights about some concepts of the subjects in your study material. It is also an opportunity for those to present papers for those who are interested in doing so. We request all students to make use of all these sessions, which would prove as a real boost towards your academic performance as well as during your articleship days. I also request the paper presenters to follow him to the stage and occupy your respective seats. As the session chairman, we have CA Ganesh Prabhu. He is a Chennai-based chartered accountant in practice and the holder of various other degrees such as Bachelor of Law from Karnataka State Law University, Master in Financial Management from Pondicherry University, and so on. He is a partner in C. Ramaswamy and B. Srinivasan Chartered Accountants, India. He has been specializing in indirect taxes for more than a decade and heading the GST and indirect taxation, compliance advisory and litigation vertical practice. It is such an honor to have you here, sir. Now I invite Saleem, sir, for the inaugural address.
Good afternoon to all. Now we are moving to the indirect tax session, basically on GST. When it comes to the GST, we have best option in our country is Ganesh Prabhu, sir. He is best friend for me. Whenever I calls, he comes and deliver lectures in our Ernakulam branch also. Today also, after this session, in the evening, we have a session for members. That is the way of teaching and preaching about the GST. Welcome you, sir. We can get lot of information and insight on the GST aspect from our Ganesh sir. Welcome.
I welcome you all to this session. There are a lot of challenges in organizing everything. Till last night, 11:30, okay, to be more precisely on the notification end, maybe by 6:30 onwards, I had my own challenges in do I step this morning flight or not. Okay, I'm sure all of us are aware, we are all running a very strict time schedule and deadlines. Thank God, government understood all. Yet a relaxation should come for income tax. As of now, GST is got relaxed, so I'm little relaxed, okay. Because a lot of questions are always there. Coming as part of today's discussions is concerned, where Saleem sir has called me and said that you have to chair the session for indirect tax. Straight away I said yes. And when the topic were chosen, all had its own importance associated with it, be it the TDS and TCS, or a matter in connection with input tax credit, and my pet favorite topic, the annual return and the GST reconciliation statement, now we call it as. Maybe all this look with little simple from a layman's perspective, but as a intern who is pursuing all this day in, day out in the organization, we only know what kind of challenges. In fact, my people in my office started to crib at me, sir, at least at one point in time, you start calling by name, sir, so that we will know. You are saying table 8 is matching with the table 6, table 6A is matched with the table 8A. So that is unfortunately, over a period of time, that is a way in which it will be cultivated over a period of time. Here we have 3 student speakers who have chosen their topics to present their thoughts in connection with this. Had an opportunity to see all the 3 paper presenters' paper. A lot of homework has went in, honestly to say, and this deliberation within the given time to them, how they are going to deliberate and enlighten us like you, I'm also waiting. So over to the speakers on their order of preferences. Thank you.
Now, we will move on to the presentations. Each speaker is required to speak for a minimum of 15 minutes and a maximum of 20 minutes. You will be shown a green card at the completion of 15 minutes, a yellow card at the completion of 18 minutes, a red card at the end of 20 minutes. And you will be given a grace period of 30 seconds to conclude after the 20 minutes. I repeat, each speaker is required to speak for a minimum of 15 minutes and a maximum of 20 minutes. You will be shown a green card at the completion of 15 minutes, a yellow card at the completion of 18 minutes, and a red card at the end of 20 minutes. You will be given a grace period of 30 seconds to conclude. The first presenter speaker is Miss Himadri Jain. She is a CA final student and has been awarded the Best Presenter Award in the National CA Students Conference in Mumbai and participated in the CA Students Conference in Ranchi. Her topic for presentation is annual returns, GSTR 9 and GSTR 9C reconciliation. Over to you and all the best.
Dream, plan, and act. Am I audible at the back? I'm audible, right? Yeah. So, dream, believe, and action. I actually can't resist myself from rationalizing these words. So, if somebody is having the desire to achieve something, and he is believing that he can achieve something, he will surely achieve it. Greetings to the consortium and the respected dignitaries. This is Himadri Jain, all the way from Rajasthan, to boost your knowledge about the major economic reform which was implemented in India on July 2017. Yes, it's none other than GST. But before moving forward, I would like to put forth a question in front of you. So, my dear friends, what do you think is the most difficult task for those who are not chartered accountants or they are not associated with our profession with respect to return filing? It can be a GST return, it can be an income tax return or any other return. So if anybody would like to answer. All right, so I'll just repeat the question. Which is the most difficult task for those people who are not CAs with respect to return filing? Anybody? At the back? Okay, okay. Anybody else? All right. Well, the most difficult task for those who are not CAs is the filing of return itself. Don't you think so? Well, and thus, here we are, the chartered accountants and the future chartered accountants who are there to make the most difficult task trouble-free for everybody. And when it comes to GST annual returns, can we have a huge round of applause for those who are doing it, please? So they actually deserve this. Well, before going directly to the GST annual returns and reconciliation statement, I would like to have a short brief about what GST is. Well, I know already majority of the people are definitely aware of what GST is, but just to give a background, well, GST has been a major reform of the current government, replacing multiple taxes and cesses of the state and central government. It has been a major relief to trade and industry. Wait, 1 second. What did I just say? Relief? Major relief. And GST. Well, those who are doing it are really aware of this. But yeah, I think it is a relief. So definitely the problem with us is that we are so used to with the earlier tax regime that we are reluctant to adapt ourselves to the new tax regime or the GST. So, and definitely this is such a major reform and it will definitely take time to get properly implemented in such a diverse country like India. But it will because of its benefits that it provides. For example, removal of cascading effects of taxes, unified compliance procedure, faster movements, avoidance of double taxation, and so on. So this new tax regime has already completed many anniversaries, and now it is the time for the members of trade and industry to get ready for undertaking the exercise of GST annual returns and filing of reconciliation statement. Well, now I would like you to board on the flight of CGST Act, some technical aspect. Well, as per Rule 80 of CGST rules, every registered person who is having an aggregate annual turnover exceeding rupees 2 crores is required to file a GST annual return. And every registered person shall furnish the return along with a self-certified reconciliation statement, which reconciles the value declared in the annual returns with the audited financial statements for the financial year electronically. Okay, so the type of annual returns are basically GSTR 9 is for regular taxpayers, 9A is for composition taxpayers, 9B is for e-commerce operators, and 9C is for those people who are liable, for those registered persons who are liable to GST audit. So, I guess this is how a GSTR 9 looks like. Well, relax. I'm not going to describe it in detail. You have already done it. So, but just to give you a background, I'll just have a short brief about its contents. So, it consists of 6 parts and 19 tables. Part 1 consists of the basic details. Part 2 consists of the details of outward and inward supplies. Part 3 consists of the details of ITC, which Rahil probably is going to explain. Part 4 consists of the details of taxes paid. Part 5 is quite interesting, and generally people are a bit, a bit puzzled while dealing with part 5, which is for the transactions which relate to previous year but are declared in the current year's annual return. And part 6 consists of the details of demands and refunds. And then comes the GSTR 9C, which has been amended by CBIC with effect from financial year 2021 onwards. So now taxpayers having turnover exceeding rupees 5 crores in the previous financial year are required to file Form GSTR 9C on a self-certification basis by reconciling the values declared in their annual returns and with the audited annual financial statements. And those having turnover with less than 5 crore rupees are exempted, fortunately. And I really appreciate the patience of audience sitting over here, really very hungry of knowledge. Yeah. Of course. So, and that too, when sometimes the session is quite boring. So I can understand. All right, so I'll make it an interesting one. So as chartered accountants, we are more focused on certain fraud-prone areas. So there are certain areas which, attract our special attention. So while filing GSTR 9 and a reconciliation statement, there are certain areas which require special attentions. For example, intra-company transactions, for example, high C sales, for example, custom bonded warehouses, and so on. So I would just like to have a short brief about it. So intra-company transactions, such as stock transfers, are which are taxed in the GST regime in case of interstate supplies, are strictly speaking not taxable supplies of any company because their effect gets nullified at the consolidated financial statements level. So we as professionals should identify and report such transactions for audit, and this would require a special attention of ours while dealing with such intra-company transactions with respect to the provisions of GST law. The next is regarding high C sale transactions. So what are high C sales? Somebody has heard of it? Customs? Okay. So high C sales is, as the name suggests, sale in high seas. So, ICAI, our institute, has clarified that IGST on high C sale transactions or on imported goods shall be levied and collected only at the time of importation. But how do we have to record the turnover, because there is no levy of IGST or there will be levy after some time. So, as per our institute, high C sale transactions may be reported as exempted under table 5D. Table number 5D. And the last one is the sale from custom bonded warehouses, where our institute has clarified that in case of supply of warehouse goods, integrated tax shall be levied and collected at the time of warehousing? No. It shall be levied and collected at the time of final clearance of warehouse goods for home consumption. Therefore, the goods may be sold from custom bonded warehouses to any other person in India, or may be exported out of India, and there would be no levy of IGST. So these are some, crucial transactions which require special attention of ours. So I absolutely agree that GST is just born, and we are facing many difficulties dealing with GST audit and reconciliation statement and so many other things, the recent amendments, the changes in provisions. And there is a lot of efforts would be required on the part of both GST auditor and auditee to prepare for such highly specialized compliance tool. So as chartered accountants, we should join hands and try to minimize the difficulties faced by both GST auditor and our partners. Well, giving a conclusion to my words, I would like to put forward my favorite approach of life, which says that your mind will answer most of the questions if you learn how to relax and wait for the answers. So dream big, dream high, believe in it, achieve it, but take some time for yourself and relax. Thank you so much for such a patient listening. Thank you all.
Thank you, Himadri. The next speaker for the session is Mr. Rahil Lokhandwala from Ahmedabad. He's a CA final student from Ahmedabad who has presented papers at the CA Students Conference held at Prayagraj and Pune. His topic for presentation is input tax credit under GST law. Over to you, Rahil.
Am I audible till the last? Okay. Can someone help me to guess what picture is visible on the screen currently? Skyscrapers, buildings, correct? So, the main reason behind this tall, huge standing buildings are its pillars. Now, pillars are the things which provide support to these huge, tall standing buildings to stand against the odds of all the environment. Similarly, for the building called Goods and Service Tax, that's GST, its main supporting pillar is input tax credit. Input tax credit is a pillar which makes GST a tax different from old tax or indirect taxation. A very good afternoon to all the dignitaries present on and off the dais, distinguished guests, members of the institutes, and my dear friends. I am Rahil Lokhandwala, and I am here all the way from Ahmedabad to throw some light on the topic of input tax credit. Now, there is a specific reason why I call ITC the strongest pillar of GST. GST is a tax which is levied on supply of either goods or service or both. So if there is a supply, throughout the supply chain, each time we incur a supply, GST needs to be levied, which will automatically lead to cascading of taxation. But the main essence of GST is to eliminate this effect of cascading of taxation. So the mechanism which is being used in order to avoid the same is input tax credit. Basically, input tax credit is the tax paid at an earlier stage of value addition, which makes GST a tax levied only on the portion of value added and not on the earlier portion of value addition. Now, before moving on this wonderful topic of input tax credit, I would like to introduce you with the two basic terms. This might sound you similar, but there is a thin line of difference between these two terms. These terms are input tax and input tax credit. Now, input tax is a tax which is being paid by the recipient on all the inward supplies which the recipient has received, and it also includes the IGST paid on imports, RCM paid on inward supplies, but it excludes the composition levy. Similarly, input tax credit is the paid input tax whose credit will be allowed to the recipient to set off against the outward supply subject to certain conditions and restrictions. But before we look into that restrictions and conditions, we need to determine what kind of output supply is being made by the supplier. If the supply is an exempt supply, ITC won't be available in respect to such supply. Remember here, your taxable supplies includes zero-rated supply as well. And hence, if we make a taxable supply, full ITC will be available in respect to such supplies. So what is the conclusion is, first we determine the exempt supplies. Exempt supplies credit is no way anywhere available. So we will check the conditions which is being prescribed in further section only for this taxable portion of supplies. So it will reduce our work of burden as well. So the conditions to avail ITC is being prescribed under section 16 subsection 2 of the CGST Act 2017. There are 4 basic conditions which every recipient needs to satisfy in order to avail the ITC. The first condition is recipient must have the tax invoice. Here the law is not like you should have a tax invoice only, but any other document which makes evidence that the recipient has received the goods or service or whatever he has obtained. Second is goods or service must have been received by the recipient. So if the goods or service are being provided in lots, he can avail the ITC only after receiving the last lot of the goods. The third condition is the recipient must furnish the return on or before the due date prescribed under section 39 of the CGST Act 2017. And the fourth and one of the most important condition is payment of tax by supplier and not recipient. So what happens is, if the supplier does not pay tax, recipient won't be able to avail the ITC. But your Delhi High Court, in the case of Onquist Merchandising India Limited, made a landmark judgment, which the Delhi High Court said that if the supplier does not pay the tax to the government, recipient shall not be denied to avail the ITC just because the supplier has not paid tax. The court said that the supplier only here acts as an agent for collecting the tax and making the payment to the government. So if the supplier is not doing anything on his side, the recipient can't be put into jeopardy for the same if the recipient has done everything which law requires him to do so. Here the court wishes if the recipient has filed the return, he shall be allowed the ITC. Now, once we have determined the supplies and the amount of ITC, we shall determine what kind of outward supply is being made, or say what is the purpose of utilization of input tax. Whether the input tax is being utilized for making wholly business supply or partly business and partly non-business supply. If the supply is wholly business supply, full ITC shall be available in respect of such supplies. But if the supply is partly for business and partly for non-business purposes, then you need to reverse the ITC proportionately in relation to such non-business related supply. Full ITC will not be available in relation to such non-business supplies. Now the amount is being determined, the conditions are being satisfied. So next step comes is time limit to avail the ITC. The Act has prescribed a time limit within which you need to avail the ITC, otherwise ITC shall lapse. The time limit is being prescribed under section 16 subsection 4. which is earliest of the following two dates. First is due date of furnishing of return under section 39 for the month of September following the end of financial year to which such invoice or debit note pertains. And the second date is date of furnishing of the annual return of the relevant financial year. Let us try to analyze this provision with the help of an example. Here, the tax invoice was issued on the date of 1st of October 2020 and the debit note is issued on 1st of January 2021. So here, the time limit to avail the ITC in relation to invoice will be 31st, 20th of October 2021, that is the due date of the month of September following the end of financial year, or due date of furnishing of annual return, which we presume is like 31st of December 2021. So earlier date will be 20 December 2021. Similarly, for the debit note also, the due date will be 20th of October 2021, that is earlier of the date of furnishing of the due date of return of September or the due date of furnishing of annual return. I would like to draw attention to the second example. There is a very great amendment which is being made recently in this second example. Here the invoice is being issued on 1st of October 2020 and the debit note in relation to such invoice is being issued on 1st of June 2021. So the time limit for the date of availing the ITC of invoice will remain same, that's 20th October. But the time limit for availment of ITC of debit note, if you see I have highlighted in red color, it will change. That is, it won't be 20th of October 2021, but it will be 20th of October 2022. So what government did is they dealing the time limit to avail the ITC in relation to debit note. If you look at the earlier provision, it was like if you want to avail the ITC of debit note also, the due date will be the date of issuance of invoice, like the year in which the invoice is being issued. But now they've changed and said in which year the debit note is issued, that becomes a relevant year for determining of the time limit. So once the time limit is determined, we will proceed to determine the manner or say set off of the ITC. So here three type of input taxes available. First is IGST, second is CGST and third is SGST. Firstly, you should utilize IGST against IGST. Then if any balance is remaining in IGST, you can utilize it for the CGST and then for SGST. The balance in CGST ledger, that's the credit balance, shall be first utilized against IGST and then it should be utilized against CGST. And similarly, the balance in SGST shall be first utilized for the payment of IGST and then for SGST. Here 3 points are to be noted. The Act says you need to first fully utilize the available balance of input tax credit in the IGST ledger. So even though you are having the balance in CGST ledger or SGST ledger, and you also have the balance in IGST ledger, which is like still remaining unutilized, you need to first fully completely exhaust that balance. Then only you can proceed to utilize the ITC of CGST and SGST. Second point is, if you have the output liability in IGST ledger and you have the credit in CGST ledger and SGST ledger, first you need to utilize the ITC available in CGST ledger. And then only you can proceed to utilize the amount of SGST ledger. You can't utilize the amount of SGST ledger first and then of CGST ledger. And third is, you cannot inter-head use the ITC available in CGST head and SGST. Like if there is an ITC in SGST ledger and the liabilities in C, you cannot utilize such ITC. You need to pay that tax by cash. Now we have, I think, discussed on major aspects of ITC, that its time limit, its availment, its manner of determination. It's the time to discuss the elephant of the room. And these are the challenges lying in front of ITC. The first challenge and the interesting one is block credit. Block credit is prescribed under section 17 subsection 5 of CGST Act. Now the main essence of GST is to remove the cascading of taxation, correct? And for that the government introduced the mechanism of input tax credit. But this section, that's section 17 subsection 5, provides a list of certain goods and services which a businessman or say an organization cannot use even though it has been used in course or furtherance of its business. The list has been provided on the page 71 and 72 of the booklet being provided to each recipient. One is requested to go through the same. The second challenge is interpretation of the term in course or furtherance of business. The term business is being defined under section 2 subsection 17 of CGST Act 2017. Here I would like to quote a landmark judgment which was levied by Supreme Court in the case of CIT versus Malayalam Plantations, where Supreme Court held the term in course or furtherance of business shall not be restricted to the term for the purpose of earning profit. Means if organization undertakes any activity, even though it is not resulting into profit, or if it is not related, if it is not for the purpose of earning profit, but even though it is having some or the other nexus to the business, it shall be considered to be in course or furtherance of business, and ITC shall be available to the recipient. We will try to understand this with the help of 3 examples. First, R&D expense. Now, research and development expense is such an expense which organization incurs just to develop its product or to launch a new product. So one can easily relate it with a business, like it is having a business, it is having any, like some or the other nexus to the business. So ITC will be available in relation to R&D expense. Second is project report expense. Now the project report expense is an expense which is incurred in order to determine the feasibility of a project, that whether the organization should undertake a project or not. So if the outcome is that the project is not viable, then even the organization drops the project, but as it is used in course or the furtherance of business, its ITC will be available to the organization. Thirdly, and a bit critical one, is CSR expense. Now CSR expense is like an expense which organization incurs, might be due to statutory compliance or something like that. So we can say that it is in relation to business because business needs to comply with various laws and regulations. So ITC prima facie will be available according to the condition prescribed under section 16, that is in course or furtherance of business. But the problem lies in section 17 subsection 5. Section 17 subsection 5 block credit prescribes that organization cannot avail the ITC in relation to such supplies which has been provided as a gift to someone. So for example, if in winter season an organization is being distributed the blankets to poor, it will tantamount to gift, and the ITC won't be available in relation to such expenses. So one must note that point in this CSR expense. Third one, and the most, I think everyone might have faced the challenges during the articleship in this 5% ITC restriction point. Like when they must be like furnishing the tax audit report or any statutory audit, they must have, while reconciling the table with the portal and the books. This was a very much painful point, I must say. So what does the Act say is, the recipient won't be able to avail the ITC more than 5% of the ITC in relation to which invoices have not been uploaded by the supplier on the portal. Means, if the supplier has made 10 taxable supplies and if he has furnished only 8 outward supplies details on the portal, the recipient of the remaining 2 supplies, recipient won't be able to avail the ITC in relation to that 2 supplies. Let us try to analyze this with the help of an example. This example is basically obtained from the circular of CBIC. In the first case, the eligible ITC as per books is 10 lakhs. Now the eligible ITC which is reflected in the 2A of the recipient is 6 lakhs. So what will be the amount of ITC which shall be available to the recipient will be 6,30,000. It's like 6 lakh is the eligible ITC and 5% of 6 lakh, that is 6,30,000. In the second case, the eligible ITC as per books is 10 lakhs and in 2A it is 7 lakh. So 5% of 7 lakh will be 7 lakh plus 5%, that amounts to 7,35,000. And in the third example, the eligible ITC according to 2A is 9,80,000 and as per books is 10 lakh. So eligible ITC will be 9,80,000 plus 5%, 10,20,000. Correct? Everyone agree with this? No. Why? But rule says like 9,80,000 plus 5%. Yeah, the answer is correct. There is a proviso inserted over here that actual ITC which can be claimed cannot exceed the eligible ITC as per books. Means you cannot claim that 9,80,000 plus 5% amounts to 10,29,000. So I will be able to avail more ITC than I am actually having in my books. So the ITC will be restricted to 10 lakhs over here. With this, I would like to conclude my speech. Finally, by quoting the words of our Honorable late Finance Minister, Shri Arun Jaitley sir, who had mentioned while launching of GST that tax net has expanded. The country's market is integrated. Inspector Raj is over. The tax burden on masses have gone down. It is a win-win situation for people. And yes, my dear friends, believe me, GST is a win-win situation for everyone because of its strongest pillar, input tax credit. Thank you for being such a wonderful audience.
Thank you, Rahul. The next speaker for this session is Abidim M. Kapasi from Kozhikode. A CA final student, he has presented papers in CA Students' Conference in Kolhapur, Amritsar, and Aurangabad. His topic for presentation is TDS and TCS under the GST Act. Over to you, Abidin.
I know that everybody of you are hungry. The time of lunch has been here. So let's enhance the knowledge of one more additional topic, which is a basic topic. But after having an enhanced knowledge of input tax, ITC, and the annual return, the concept of TDS and TCS. Just a few minutes back, one of my colleagues had discussed the provisions of TDS and TCS under the direct tax. Now let's understand what is the need of TDS and TCS under indirect tax. The law or the act can be understood while reading through the ICAI material. That is okay, but we should know what is the need of that law. So let us start with the first part. See, the topic allotted to me is very basic topic, which is consisting of section 51 and 52 of Central Goods and Services Tax Act. So let's begin. Let's begin slowly. I'll go slowly. I want you to take back anything from here. It's not like speaking in a speed and just without understanding it. So let's understand the topic first. So what is the need of this law in this indirect tax law? To curb the bulky transactions which are revolving around the economy. The term of TDS and TCS is akin to the concepts under the direct tax laws of the country, where the tax paid or the tax deducted by the deductor is being utilized while filing the income tax ITR, and similar in the case of indirect tax, the TDS deducted by the government departments that we will come up across, and the TCS collected by the e-commerce operator will be utilized in the electronic cash ledger. The amount of the TDS and TCS, it would be available in the electronic cash ledger, and that amount will be adjusted against the output tax liability. So let's understand the concept of the central theme of TDS is what? Deduct and remit as you pay or incur the expense. Central crux of the TDS. So section 51 of the Act says that government departments are required to deduct tax if their contract value exceeds rupees 2,50,000. See, the law, whether it is indirect tax law or the direct tax law or any law, that is a game of words. So we must appreciate the fact that only the government departments are required to deduct tax at source for the supply of goods or services or both, where the value of contract is exceeding rupees 2,50,000. It's not like equal to or greater than. If the contract value is exceeding the limit, see, these laws, as it is said that the illiterate of the 21st century is not the one who cannot read and write, but the one who cannot learn, unlearn, and relearn. So these are the law. This might change in the upcoming years, but as of now, the limit is this. The value of contract must not exceed rupees 2,50,000, the value of contract. So who are the government departments? It can be department or establishment set up under the act of any government, like India Post is there, Indian Railways is there, or any municipal authority, local panchayats, or any public sector undertaking like SAIL, GAIL, ONGC, etc. This provisions is being applicable only for the government departments, mind you again. Okay, let's go to the next topic. In the provision, what they are explaining is that if the place of supply, herein after referred to as POS, place of supply and the recipient of the taxable supply is located in a different state, he is not liable to deduct the tax. If you take the example, supplier A is in Kerala, POS is in Kerala, recipient B is also a Kerala, that is called an intrastate, and in that case, TDS shall be deducted. In case of another case, the recipient C, whereas the supplier A who is located in Kerala, place of supply is also in Kerala, but the recipient is Punjab. In that case, TDS is not required to be deducted. And the other case, Kerala to Tamil Nadu. In that case, it will be an interstate supply. In that case, TDS is applicable. Only in the second case, it is not applicable. And registration is compulsory for everyone. And within 10 days of deducting the tax, you have to remit the amount in the government's account, and in this case, the government department will issue a TDS certificate. They will not file the return. They will deposit the tax and they will issue the certificate, right? In normal case, we pay and we upload the return. But in this case, government agencies will issue a TDS certificate to the recipient. And yes, as I informed that the amount of the TDS, it will be reflected in the electronic cash ledger, and if the deductor fails to remit the TDS, he shall be liable to pay an interest of 18% per annum, and in case of erroneous or excess deduction of tax, the agency can claim the refund. So let us understand that what is the key difference between Income Tax and Indirect Tax Act. Under the Income Tax Act, we have that different sections are being introduced. for different nature of expenses. And in Income Tax Act, we don't deduct the tax on the consumables purchased, right? In this indirect tax, government departments are required to deduct tax on all the taxable supply of goods or services or both. Government departments are required to deduct tax on all the taxable. Okay, so let's move on to the another topic, that is the tax collection at source. Again, the crux, that collect and remit as you sell or receive. Okay, collect and remit as you sell or receive. So section 52 of the Act tells that again it is applicable only to the electronic commerce operator, that is the e-commerce operator. So e-commerce operator are required to collect tax at the rate of 1%. Earlier it was 2% on the net value of taxable supplies. And there is no threshold requirement. E-commerce operator has to mandatorily register themselves under the GST Act. And let's go further. Same in case of the TDS, within 10 days you have to deposit the amount of tax in the account of the government. And in this case, the e-commerce operator will have to file the return in Form GSTR 8 within 10 days from the end of the month. And as you all know that the amount of TCS collected by the e-commerce operator, it acts as an ITC balance itself. Consider that amount as an ITC balance. And that would be reflected in the GSTR 2A of the supplier. And as we all know that yesterday itself the date has been extended, so it's not being updated here. So please update yourself that the extension has been made for filing the annual return. And the contents in GSTR 8 and 9B will include the following things, that is the outward supply of goods and services returned, and amount of tax collected during the month or the financial year. And in case of any kind of errors or omissions or if like any kind of rectification is there, that amount will be added to the output tax liability, and supplier will have to pay differential tax along with the interest. It will be added with the output tax liability. So after attaining this much knowledge, notices and reply, this is like, I am not here to take a class or something like that. This you can read from this act, and it is, liable to change. Just I will explain. In case of e-commerce operator fails to furnish the details, then in addition to liability, he shall also be liable to pay the penalty. And the maximum amount of penalty, it would go up to 25,000 rupees. So let us understand an example, practical example of how the concept of TCS works. That ABC Private Limited of Ernakulam sells mobile phones on Amazon, and a customer from Ernakulam ordered a mobile phone worth rupees 40,000. GST rate is 18%. Amazon, that is the e-commerce operator, will not work for free. He will charge commission amount at the rate 10% on the value of goods. So calculate the amount which ABC Private Limited will receive after all the deduction, assuming that there is no ITC balance lying unutilized. So just analyze the question that e-commerce operator will collect the tax as well as he will also collect the GST amount on the commission charged. So let's go for the first step, the illustration. This will be the invoice value raised by the ABC Private Limited, being the supplier to the customer, that is the taxable value including the tax amount. The invoice value comes to 47,200. Now, invoice raised by Amazon to ABC Private Limited. Amazon will issue invoice of 4,000 rupees, 18% IGST they will collect. TCS also Amazon will collect from whom? E-commerce operator ABC. So let's as being discussed by Mr. Rahil, that utilization of ITC balance. ITC balance first against, ABC has to pay the output tax liability of 18%. In that he can utilize the output tax liability, means the IGST of input tax and the credit of TCS, and the amount deducted by the Amazon, including the tax and the TCS, comes to around 5,120. So the net amount which will be received in the hands of ABC Private Limited will be amounting to rupees 36,000, being the wholesaler or whoever as the case might be. So by the end of this, I would like to conclude that the provisions which I just discussed is liable to change. The limit might be liable to change. The rate of TCS earlier was 2%, but now they have reduced to 1%. So at the end, we must just appreciate the initiative of the One Nation, One Tax, One Market initiative of the Government of India positively, so that in the years to come, this, as I'm having interaction with one of my colleague who will be presenting on the topic of data analytics, he told that in the years to come, these procedural requirements will get abolished. The only thing which we will be left with, the knowledge, the litigation practices, and the all other important topics. This everything, it will be getting taken care of by the robotics and the artificial intelligence, right? So let's enhance our knowledge, and thank you for your patience listening. Thank you so much.
Thank you, Abdeen. That was the last presenter for this technical session. Now I invite the session chairman, C.A. Ganesh Prabhu B, for his evaluation or remarks.
I'll not take much of your time, max 5 to 7 minutes, subject to his approval, okay. Now if he says yes, I will go, otherwise, Saleem sir already given me signal. Now, coming back here, I first of all congratulate all the 3 student speakers. Standing up before a podium and speaking requires a first courage to come and stand. Honestly, I still remember when I was sitting on the dais, my first presentation, post-qualification, okay? Kindly understand, post-qualification. Post-qualification, for the first time when I stood up for speaking before a group of, very closed group of 30 members in an association, I was pouring like anything, okay? Though I was confident in the topic, that all is there. But in terms of the presentation, be it Himadri Jain, all the way from Rajasthan, made her presentation very nicely in terms of Form GSTR 9 and 9C, the happening topic for at least for the last 2 weeks. And mark my word, it's very tough for a layman, for even leave layman and all. A 300 crore turnover company CFO scratching his head, don't know how to tally. Calls up the intern and says, somehow do and tally and give your, from the statutory auditors they are hitting. See, a lot of challenges are there. Very rightly stepped into certain critical areas, how to handle the intercompany transaction, the transactions in connection with the intercompany, how it has to be handled. How are we going to report the high C sales which are happened? And in connection, something to do with bonded warehouse scales. And there are connected points of this. When I go back to, again, our next presenter, who is going to be Rahil Lokanwala, where he was very particular on ITC. Again, a very good presentation in terms of the content, delivery, everything was good and better. Precisely getting into reversals of ITC, though we can always say it's a skyrocketing building, ITC is the pillar of GST, ITC is the primary reason behind GST. Mark my word, till this minute, the number of litigations that we are going to have more is going to be only on IGST. Mark my word, this is an happening law. On the day in which I qualified, I decided I'm going to practice only on indirect taxes. And on that day, first paper on GST came out, and when I was start seeing the budget for the first time, 2006, somebody stood up and told, later I know that somebody is Sri Honorable Finance Minister P. Chidambaram. Later I know, okay? On the day in which I was seeing, I don't know. I'm little blunt and honest now before you all. He came out and told, by 1/4/2010, we will implement GST, para number 126 of the Finance Minister's speech. Oh, 2009 we will pass, 2010 GST will come, after that skyrocket only. Okay. 2009 I have cleared somehow, that's God willing, we'll forget how you cleared and all, don't ask me. Okay. Now, see, you all know, you also cleared inter and all. Now coming back here, getting into it, nevertheless, in spite of whatever we said on input tax credit, a lot of litigation still around, usage of the word business, usage of the word non-business, how to treat the non-business transaction, reversal of credit, whether rule 36(4), that 5%, 10%, 20%, is it valid? Introduction of a new section from day after tomorrow onwards, straight away into the ITC, and followed up by court after the court has went and told, for somebody not doing something, how I can be penalized? I can only pay to my supplier. I cannot go and file return on behalf of my supplier and all. Come on. You cannot always be responsible for your brother or sister's mistake. You can be responsible for your mistake maximum. That itself very tough. Okay. Now coming back here, these are all these challenges was brought out in the specific presentation of input tax credit. Coming back here, not but last the least, Abdul Kapasi touched a very rare topic, mark my word. At a student level, stepping into a topic of TDS and TCS itself is first tough. To someone to stand up and speak on TDS, it requires, because it is not the income tax TDS. You cannot say hijack 194I, 194J, 194K, hijack and all will not be applicable. Here section 51, one section applicable for one person, government related organizations. Sir, I'm a private limited company, for me TDS applicable. Get out, only government. Why? Government is today paying a lot of GST to various vendors. Okay. All the vendor collect from the government GST money, does not pay to government GST at all. Sir, it is not like that, sir. Yesterday I was in a hearing of a particular client. DGGI, Director General
of GST intelligence has identified this contractor. Government says we have deducted TDS to the tune of 40 crore rupees turnover. Our contractor, okay, has reported in the return 22 crores. Let me repeat, understand the purpose for which TDS is deducted. In the 3B filed by the respective contractor, he says, I have did a business of 23 crores, whereas government says, I have made payment to him, on that I have deducted and deposited to the government to the tune of 40 crores. On 40 crores, 2% is deducted and paid. Mark my word, it is a trial left by the government in the GST system. Beyond that, nothing great. That money is equivalent to your cash. Whenever you want, you can withdraw. Same is the case of TCS. How many cases you want? Lot of people did businesses with Amazon, businesses with various other organizations, never reported at all in their books. I'll take extra 1.5 minutes just to brief you on. If you know this story, mark my word, in your life you will never forget TDS and TCS. I had an opportunity to meet a client on March 2016, 12th March 2016. He came out and discussed with me, sir, my turnover is aggregating to 8 lakhs. I'm not interested to come into TNVAT. This discussion is under TNVAT. Under TNVAT, under KVAT, everywhere we had only 10 lakhs as the threshold. So if I manage this year, next year a GST will come, I will implement, sir. Okay, good. I discussed with him, spent time, told what is you are doing. No, I'm selling this product. Okay, you sell through this. Next year, he never turned back. And for the earlier consultation fee itself is pending. Okay. So when he called up twice or thrice, I never returned his call. I left it as it is. Then he was in touch with my senior partner. My senior partner called me and told, Ganesh, he is not coming. Ask him to come, sir, with the checkbook. Otherwise, let him not come. Now he came, he gave the old fee and told, sir, whatever you told, I did only in that way. What I told, your turnover is reaching 9 lakhs. Take a SB account or you take a current account in your spouse name, in your wife name, do business there for another 6-7 lakhs so that you can manage this year. And next year you said you will register. Our enthusiastic guy did in the next year 38 lakh turnover in 4 different accounts. Okay. His account, his wife account, and the next 2 accounts, daughter 1, daughter 2. What is daughter 1 doing? UKG. What is daughter 2? Just born 4 months maximum, or should be something, or maybe I may be wrong in the age, that's all. Minor account opened in HDFC Bank. Now, how it is, I was really surprised. How government able to know this? Fellow opened 4 bank account, but linked everything into single primary email ID. Intelligence officer are all intelligent, no? He will not see the secondary mail ID. He saw the primary mail ID. What is the primary mail ID? He linked, he told, you are the same person doing in the same transaction. Government made a point very clear. In VAT, enough frauds are being done. Enough escape of turnovers has happened. In GST, we will say mandatory registration, and we want mandatory registration. I will register. I will sell 10,000 rupees mobile phone on cash on delivery. But for COVID, we had earlier cash on delivery. For 10,000 rupees, I will sell. I will report the transaction for 1,000 rupees. Balance taxes, sir. Tax to the account of the businessman. No trial left in the system. TDS, TCS, left trial in the system. Taking up the topic and speaking itself requires a gut by itself. I congratulate that. Among the 3 presentations, I personally felt Rahil Dokanwala is little better. Mark my word, in terms of the marking, a little difference. So that is the way I have analyzed it. I thank the organizers, thank the Sikasa Ernakulam specifically for calling all the way from a fellow somewhere doing something small in Chennai. Thank you, sir. Thank you all for effective and patient listening, and thank you all the speakers. Over to you.
Thank you so much, sir, for those enlightening words. Now I invite the session chairman, C.A. Ganesh Prabhu, to present the mementos to the student speakers. First, Himadri Jain. Rahil Lokanwala. Abidin B. Kapasi. I invite the chairman of Ernakulam branch of SICAS of ICAI, C.A. Saleem Abdul Rashid, to present a token of appreciation to our session chairman, C.A. Ganesh Prabhu B. I invite the Joint Secretary of Ernakulam branch of SICAS of ICAI, Mr. Abhishek A. Krishnan, to propose the vote of thanks.
Good afternoon, everyone. I thank our session chairman, C.A. Ganesh Prabhu sir, for promptly accepting our request and chairing the session. Thank you, sir. And I thank all the student presenters, Himadri Jain, Rahil Lokandwala, Abidin B. Kapasi, for enlightening us with various provisions of indirect taxes. And I thank everyone from the audience for your patient listening. Thank you so much.
Thank you all. We'll now disperse for lunch. It's one.
See Anand sir to the stage. I request all the paper presenters to also occupy their seats on the dais.
Good afternoon to all. Finally, we are going to conclude our session with a technical session. As in the past sessions, we are studying about only the law and audits. But more relevance is required for the technology. As everyone knows, Anand sir is the techie savvy, having deep knowledge in the technology. And another wonderful thing is, he is also my teacher in DISA course. Thank you, sir, for coming and enrich our students. Over to you. And I welcome all the student speakers.
So, very good afternoon, everyone, and it's great to be here. And as Saleem sir said, it's always a... Is my presentation?
Yes. So you can use the net if you
Yeah.
want.
Yes.
You change the slide.
Sure. I think I'm audible, right? Great, okay. So, first of all, I would like to thank, Ernakulam branch and the SICASA committee out here for inviting me. It's a pleasure always to be among students. And one of the things I always say, Saleem sir, which was there, that something around 1999, I remember I was a foundation student, okay? I used to be that time also we used to have foundation. Now again it has come. And I remember I was just a guy, I come from Assam and it's a small place. So I have till class 10, and the only thing you have knows is basic stuff. And then you do your 10+2 and suddenly you are, I don't know how many of you are here CPT or foundation student, you understand one feeling that you are in college and suddenly you are in office. And every day you have to work according to the office way of doing things. So it was very funny, but luckily my principal sent me for one of the conference which was happening in Chennai. And that time Institute has a lot of this very interesting thing that they will arrange for your stay, blah, 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 all the things used to happen. And it was an interesting thing. And there was one paper presenter. There were a lot of paper presenters. One paper presenter was presenting on information systems audit. And that was the first time I've heard that there is an auditing, there's something called information system audit. I've never heard about this thing. Because I did my articleship from a small and medium firm in Bangalore. And there the only thing is to be income tax, audit and other kind of stuff. And that hooked me, that, okay, there are stuff like this, things are happening, guys. So when they said that, you have to talk at a student conference, I said, always ready, because I have been immensely benefited by this, guys. Even if one session is useful, it adds a lot of value. Now, my topic, I will not try to cut down among the sessions time of our paper presenter, but I have to just set the context first. So let me try to take 20 minutes to set the context, and then we have some amazing, I would say, paper presenter, as well as I went through their material, and they have also prepared for that. On ABCD of the new tech, or what are the things which are changing. We have Siddharth, who's all the way from Hyderabad, and I went through Sabnam, that she is the document which was on ESG, which is the new stuff which is coming up, and amazingly a new area of practice itself for chartered accountant, new avenues. And also when Hari Krishna's presentation on insolvency code, these are some of the areas where earlier, we never used to heard chartered accountant being there and all things. But friends, it's changing. I know many of our people are actually watching it online because of the taxation season and all that thing, and everyone is busy. But think of one very interesting thing. As chartered accountant, there is a lot of things which is changing. And if you've heard this term called change agent, this term basically comes from, if anyone has liked chemistry in their old time, they know that in chemistry, a change agent is a very small part of the component of the overall chemical analysis, which can do a big impact. Now, we are becoming the change agent. Why? That is the question we need to ask. The point is, chartered accountants have survived the onslaught of a lot of changes which has happened in our profession. But with the time, we are now changing. This is a picture of a person who were called Luddites. I don't know if you've heard about this term Luddites, but if you Google this term Luddites right now, it will tell about a kind of person who has problem with technology, or who is not very comfortable with technology. And friends, one of the interesting thing is, where does this genesis come from? This genesis come from in the 1800, when the first time steam engines came. The workers who were there, they said, no, this is going to take our jobs. So they started destroying these factories. And they used to go around for 50 years. They keep on going and destroying the factories. The moment they'll destroy the factories, the company owners will go and make one new factory. Because instead of hiring people, automation was the best option which can happen. And even after destroying and all the thing, we could make more money. Today, this term is used for people who have a fear of loss of work due to automation. Now, when I'm saying this, I want to talk about this 4 very interesting back-end stuff which we should know. See, if you understand, today we are called as, we are in the 4th industrial revolution. And I'm not telling this, it is being called by World Economic Forum. So they talk about that first industrial revolution came in the 1800, when the steam engine came into picture. Then came our electricity users. If you have seen one movie of Charlie Chaplin, there was one old movie called Modern Times, where he goes into the machine, comes out and all the thing. This movie came in 1934, and it was a big hit. And you see, this was all about mass productions or mass, assembly line using electricity. Now, that was the whole idea behind that. Then came the 3rd industrial revolution, which we all know as the computerization. I remember, I don't know, when you came into the articleship or anything, anyone who first time hear this word, digital signature, honestly tell me, did you thought that digital signature is you sign and scan, that is digital signature, or you really realize that it is a kind of a dongle which has come? We all thought, even me, I used to think that digital signature is that. But we have come a long way where we are using digital signature for all our filing today. Now that was the automation. And friends, this was amazing because of two reasons. This automation which happened has been so fast. Like I'll tell you, one of the author, I read one of the book and he said, if the amount of automation which has happened in IT industry or computer industries, if that would had happened in automobile industries, so imagine there is Lenovo as a company or IBM as a company, or there is a company which is Volkswagen, which makes car. In both this company, if you have the same amount of automation, it would had been something like what we call it as a car from Volkswagen will actually run in 1 liter of petrol for at least 1 year. That never happened, right? That kind of automation never happened. But your computers, like I'm sure today we have Vivo as a, Vivo which is supporting this. If anyone has seen a Vivo phones and all things, they say octa-core processor. Octa-core processors means basically there are going to be 8 CPUs in the phone. And they have AI for your photographs and all that things. So it goes, I'm not promoting them, just trying to give the example, think of that. So the point is, they are going for a level of thing. And the last one is what we are now today. This is as per World Economic Forum. They said we have entered the 4th industrial revolution. It happened in 2017. That is the start date. So the peak has not come. And they talk about this as cyber physical system and all these areas like Internet of Things, big data, and all that thing. Now, when I say cyber physical system, I hope all of you have a kind of app in your phone called OK Google or Siri or Alexa, right? Any of you? So who's having Siri? Okay, mark that person, he is rich or she is rich. I'm just joking. And he says, fine, iPhones are rich. I'm just joking, okay, don't take it otherwise. But if you ask Siri, we did an experiment during the lockdown, we are in Bangalore office, we were just sitting to what to do. So we had a Siri, we had Alexa, and we had OK Google. And we did an experiment because it's a cyber physical system. Because the Siri which ma'am has on her mobile, it is different than the Siri which I have in my mobile. Because Siri, the program is same, it is different because of the uses which is there, right? It learns. So we started asking a question to Siri. Siri, who's your father? So first time it will say Steve Jobs. Second time it will say the engineers at Apple build me up. If you start asking this question more than 30 times continuously, Siri, who's your father? It will give you an answer. Again, Siri, who's your father? If we did it more than 30 times, Siri becomes angry. That's a machine. It's becoming angry. We tried this thing with Alexa. Like, you can try one thing with Alexa app if you have it. It is now supporting Hindi. And you tell Alexa, Alexa to marja. Like, go and die. You know what Alexa will say? Shubh shubh bolo. You can try it up. And it is interesting. You are dealing with a machine, but the machine is having a very human-like features, right? And you can try this term with OK Google. Android is the most funny thing. If you continuously keep on saying something to Google, after a point of time, OK Google will say, as of it is listening to you. Just like a human listens to you, it's listening to you. Now, this is the new cyber physical systems we are talking about. And this is changing, guys, the complete concept of audit. This gentleman, Klaus Schwab, is the chairman of World Economic Forum, and he wrote this book along with multiple experts in this area. And as per them, the 4th industrial revolution is coming at a very fast pace. So the old technology took a lot of time to adapt. But the 4th industrial technologies are going very fast. Just to give an example, what Mr. Klaus Schwab is saying is, he is saying that, to reach 100 million user, telephone took 75 years. And I don't know how many of you have played the game Pokemon Go. Anyone Pokemon Go? I was searching for some Pokemon here. I couldn't find any of that when I was coming. I have a Pokemon. I love that game. It's so fun. Pokemon Go got 100 million in 1 month. Can you see the scale at which the speed of change which is happening? And this leads to one very interesting thing which I want to show about here. Can you see this one? This is an extract from a report called Future of Job Report. So what is this Future of Job Report? You can just Google it out. It will come Future of Job Report, World Economic Forum. It came in October 2020. And how I stumbled upon that, that is also a funny thing. As many of you would be aware of, I'm a first generation chartered accountant. So and I'm sure many of you would be a first generation chartered accountant. So what is a first generation chartered accountant? Anyone knows? Whom do you call a first generation chartered accountant? Any idea? No, not like that. Like when we say first generation chartered accountant, we are saying in that person's family or anyone, no one is a chartered accountant. He's the first guy to get into this. So what is the special thing about that guy? He will fail many times. So it is like, I was lucky. Foundation, I cleared in first attempt. I thought, CA is chiller. Then I flunked 3 times in my inter. Then I said, no, CA is tough. So you have to give the due respect to the CA. So, and I don't know, it happens with you or not, but a first generation chartered accountant is ready to try anything to pass the examination. Like if anyone says that as per Vastu, you have to sit northeast corner, you will go and search for a seat which is northeast corner. You will do anything to just pass the examination. You're frustrated actually. So I'm a first generation chartered accountant, and one of the things which happens with every first generation chartered accountant is they want their kids to also become CA. The reason is simple. Why should only you suffer? They should also suffer a little bit, right? So my daughter is in class 10. I want her to also become CA. So they should know, right? Life is not so easy. So I was searching that, okay, what she will do after becoming CA. And then I stumbled upon this report, which is called the World Economic Forum Future of Job Report. And they are saying 2025 onwards. Can you see this? Sorry. It is working? Yeah, it's working. Okay, off, on. Okay. So can you see this? Redundant roles? Redundant means there is not going to be having much demand, decreasing demand. Can you see the number 2 item out there? It says accounting, bookkeeping, and payroll clerks. And can you see the line number 7, yeah. Accountants and auditors. These are redundant roles. Why they are saying is, they are saying that time has come, there is so much of automation happening. See, I'm sure Saleem sir will agree with me when we were doing articleship, if our trial balance tally, audit is over, manual books of account, that was the thing. Before our principal used to come, we used to just tally the trial balance. So we have come a long way. And today you have trial balance ready. And this disruption has already started as we speak. Just to give you an example, I used to work for Goldman Sachs. And when I was in Tokyo, and whenever we used to go to US, because our headquarters was in 180 Maiden Street in New York, we wanted to find out any friend who knows someone in UBS. UBS was a giant at that point of time, and they had the biggest trading floor in the world in this thing. But today, you see this is 2005 and 2016 picture. Can you see in 2005, there are how many people are working on that trading floor? And 2016, can you see how many guys are there? And you know what is the most interesting thing? Today, it is closed. This facility is no more out there. Now, this is what we call disruption. What is the reason for that? Simple. When 2005, all this trading used to be done by humans. But I don't know how many of you heard about an app called Zerodha? Yeah. I'm sure all of you are using it also. Again, I'm not promoting it, nothing like that. But Zerodha has a concept called algorithmic trading. Anyone has heard this term, algorithmic trading? Yeah, ma'am has heard about that. Algorithmic trading basically means the machine will do the trade. You just fix the range. It will decide the market and play it up. And I remember when I was in Goldman Sachs, the algorithm used to cost around 1 million to 2 million. Today on Zerodha, you can get an algorithmic trading platform, for how much? 30 rupees per day. Now we have come a long way, guys. So you don't require to have it up. And these changes are happening in our industry. So I just want to give you last 2 points, very important. And I'm sure our paper presenter will be talking about that. I would highly recommend you, if one of the key takeaway you want to take it from today's discussion, and you should listen to all the 3 paper presenters because they have some very interesting thought process which is there. The first thing is you should go through this future of job report. It's a 163 pages document. I just gave you an extract. Just see it for yourself. Because you guys are the future of the profession. And our institute understand that. I don't know if you know, there is a committee called Digital Accounting and Assurance Board, which is actually trying to get all the chartered accountants ready for this future things, which is going to come. And you agree to one point. It is a first mover advantage. If you want to be in any of the new field, you should be the first area. Second thing is this book, which I highly recommend you to read. And why this is such a great book, because this gentleman, Richard Susskind, he, in 1998, predicted that email is going to be the de facto standard of business communication. And we see how many emails we are sending on a daily basis. And today in his book, he's talking about three professions here in this book: lawyers, accountants, and doctors. And they said these are the three professions which are going to be highly disrupted by technology. And this technology is what we are talking about. This is the kind of things which was done a global CFO survey, and they said that RPA, AI, automation, they will be talking about, Siddharth will be talking about that. All these things in the near future is going to become very, very important. Now, the point is, friends, in this given situation, the best option for us is to adapt to this. Know this is coming and be part of that, okay? So this is what I wanted to set the context for that. ESG, which is, is all about your environmental sustainable goals and other things, they take a lot of data to crunch. I remember when I was in Infosys, every time we used to book a flight ticket, one of the calculations they used to say that, can you do this meeting on Zoom or anything? The reason was, this is your carbon footprint because of that. So they are calculating for every trip I'm going to take, this is the cost which is going. Now, this is something which is becoming important because ultimately we have one earth. We have to protect it. And on the insolvency case, where we have an amazing presenter, we need to see the new things which are happening. If you have heard about, in every insolvency cases, we have a forensic engagement which chartered accountant works on, and there is a use of huge amount of technology out there. That's something which is there, that every part of your business is this. Recently, there was a statement by my previous company, Goldman Sachs. They said, we are a technology company. That's a very interesting thing, because every company is a digital company right now, and that's what we should remember. So friends, that's my basic setting the context. Now, I would request the paper presenter to come. Siddharth, you would like to start? Or? Yeah, sure. Thank you.
Now, we will move on to the presentations. Each speaker is required to speak for a minimum of 15 minutes and a maximum of 20 minutes. You will be shown a green card at the completion of 15 minutes, a yellow card at the completion of 18 minutes, and a red card at the end of 20 minutes. You will be given a grace period of 30 seconds to conclude. Our first speaker is Mr. Siddhartha C., a CA final student who has been a vice chairman of SICASA Hyderabad and also presented various papers at various student conferences held across India. He has won the Best Paper Presenter Award at the CA Students Conference held by SICASA Vijayawada branch and by SICASA Madurai. He has contributed as a co-member and a participant for the Best Branch of SICASA at the regional level. His topic for presentation is Relevance of ABCD Technology in Auditing. Over to you, Siddhartha, and all the best.
Is it okay? Okay.
So, dignitaries on and off the dais, my co-students of the future of the profession, a very good afternoon all. My topic of the session is relevance of ABCD technology in auditing. Anybody can tell what is the ABCD here? Not the alphabets, in technology. Okay, great. Okay, not student speakers, you know very well. So I want to make this session a little interactive because we are free here. So no restrictions, nothing all. Like last session, yesterday, last session, like elephant can't dance, we'll go in that flow only, okay? And the topic is relevance of ABCD technology in auditing. Mark my words, down the line 10 years, the topic will go like this, relevance of ABCD technology auditing, not in auditing, because the entire audit process will become changed down the line 10 years. Not in the audit, everything. We can say the technology in auditing, instead of that, we can say the technology for auditor, because we've been into many streams other than auditing, right? So, I think it's not, yeah. The context is very simple. Introduction, ABCD, use cases, conclusion. So, in introduction, what I want to cover, sir already told majorly 70% of the introduction about the Industry 4.0, World Economic Forum Jobs Report 2020. And if you have very interested about the World Economic Forum Jobs Report, you can go and search in the Google. You'll find a document, very lengthy document. In that, the increasing in trend, first one is machine learning, and second one is data analytics. The order might be gone wrong, first or second or one. The initial stage, machine learning and data analytics. In decreasing in trend, overall in the worldwide, third and fourth position is accountant and auditor. And in India, fifth and sixth is accountants and auditing. So we have to change. That doesn't mean we auditors don't have scope in future. We have scope that was shifted from traditional methods to new methods. Like yesterday or today morning, we have discussed DT session and IDT sessions. What came into our mind when it comes to income tax? We file returns, we'll get refunds if possible, and we'll interact more with the customers and we'll enhance our circle. But that's not correct. We can file income tax return through online only without having any human intervention, like the basic income tax returns. Down the line, 5 to 10 years, the auditors are dealing only with consultancies, litigations, and assessment, not returns, not anything. You can mark my words, because the technology has been changed. We've been using the softwares now. Even how many of you have done income tax return in first 1 or 2 months of your articleship? You can raise your hands. 1 or 2 months of articleship. Very rare, because now it is very rare, because at the initial stages of articleship, what we have is only vouching the bills, reconciliation bills, and these small things. But now it has been changed. Everything is doing by Tally or any other ERP software. It depends on client and his network. So digital transformation, everything has been changed into digital. Like we have taken some selfies yesterday, some pictures. That is a data, that's unstructured data. I take some picture, I share with 4 members, and they put in Instagram or other social media. Along with the picture, they'll add some song, any music. That's the data. And they'll tag 4 members in that. The 4 members, that data will go to the 4 members' accounts also. They'll repost it. That's the data. Everywhere the data is enhancing. To extract the data, to analyze the data analytics tool are very important, and the cost also, it differs. Normal data can be 2 things, structured and unstructured. Photos, music, videos, these are unstructured data. To extract the unstructured data mining, it takes a lot of time and a lot of efforts. And Industry 4.0, I don't need to give a brief about that. The sir has covered all the things. And the Profession 2.0. The very first principle when we get into the CA, or IPCC in the auditing subject, the first line is auditor is a, you can repeat, auditor is a watchdog, not a bloodhound. But it's not correct now at this moment, because the scope of auditor has been changed, his roles and responsibility has been changed. 143.12 yesterday, the reporting of fraud. If there is any fraud in the company, if auditor don't find the fraud, he is also responsible for the fraud. You cannot say that auditor is only watchdog now. He'll be penalized for that also. So entire scope has been changed, legal provisions has been changed, and as I told you, the ABCD technology audit will be there in future, not the ABCD in auditing, because we will write one entry there. First entry till balance sheet, the system will do everything in correct. They are not humans to do mistakes. But what we have to learn, what we have to verify in future is, what is the program behind the technology? Before entering into a transaction into the system, whether the program is correct or not, that we have to verify, not whether the transaction is getting corrected or not. You understand my point? Till now, we are in the back end of any organization or any financials. But this is the time we have stepped into the front end and also make all the changes. Let's enter into the ABCD. First one is artificial intelligence. This is a Google-made definition. I accept. It is a copied from Google. And let it make simple what is artificial intelligence. We are human beings. We are different from other creatures just because we are able to think the thought process. That's the data for us. But systems cannot think on its own. It's a general thing. And based on our thoughts, we'll do some experiments to solve the problems. We'll get some experience from our own or from other sources. And that experience is called information. And how to use the information or when to use the information to solve particular problem is called human intelligence, right? But how a machine can think on its own? Machine don't have thoughts, but we give some data or we give some algorithms or program to the machine. It's called data for the machine. And the data has been stored into DBMS, knowledge-based information system, like our human brains for machine. I'm just comparing a human body with a machine. You can connect for better understanding. And how to extract the data from DBMS to solve particular problem. When to use the data, how to extract the data to solve relevant problem is called artificial intelligence. Because we humans know how to do if any problem is there. But machines cannot do that, right? To extracting the proper data to solve particular problem is called artificial intelligence. It's a basic term. Don't get into conclusion that artificial intelligence is only one technology. If you learn this definition, I'm done with artificial intelligence. No. If you dig deeper into artificial intelligence, we can find 10 more technologies, approximately. First one is machine learning. See, we can talk with another person in a general scenario. But if a machine wants to talk with another person and machine wants to work with another machine, the complexity will increases and the clarity will decreases. To enhance the clarity and decrease the complexity, the machine learning concept, machine learning technology came into force. And we can use the machine learning along with data analytics as advanced CAD tools. We know CAD tools, we have learned in auditing, right? CAD tools during the audit. And the deep learning is sub-part of machine learning. Machine learning is machine wants to work with another machine, how to extract the data. Machine learning will take into that. But deep learning is little different than machine learning. I told in 2 minutes before that machine cannot think on its own, right? But in deep learning technology, it can analyze its own process. The normal scenario is input, process, output. But when we give output to deep learning, it can analyze what the process could be to get this output. Understand? So that's the future, not now. It isn't theoretically now, but in India, it takes time to implement deep learning also. And NLP and NLU, natural language processing. It's like, when we see the podium or the chairs, we are able to analyze based on the structure, it is chair, it is podium, because based on our past experience. But no person will come to us and tell every time, if it is like this, it's a podium, if it is like this, it's a pointer, based on the infrastructure and the colors and genders. Because we have to habituated from long time. Exactly, when a machine analyzes one particular source of data one time, in future, if it finds the similarities of the data, it analyzes that it belongs to this category. It belongs to so and so category. Like, because we have seen the Google photos. When somebody is similar to us, it will give suggestions whether it is you or not. Ever observe that? Yes, right? Yeah. And current use cases. Yeah. Machine learning, as I told you, machine learning will reduces human efforts when it deals with machines. And how it will be used in auditing is machine learning that are programmed with algorithms that allows to identify key contract terms of documents such as leases, derivatives, contract, and sales contract. there's a two type of leases, right? In earlier, finance lease and operating lease. But based on terms, machine analyzes itself. It is a finance lease or operating lease. And to identify the patterns and outliners, such as non-standardized leases with significant judgment, auditor to focus specifically on the contracts with highest inherent risk, so we can improve both the speed and quality of the performance the audit. Okay. And machine learning tool developed by auditing firm analyzes and tests every journal entry of a company made during the year, focusing on the outliners with the highest risk, so both the speed and quality of testing procedures are increased. Okay, wait, yeah. Next thing is robotic process automation. It is also part of artificial intelligence. See, when there is a process, it needs to be automated. Robotic process automation in general scenario, what we do repetitive tasks, like I told you, the vouching and verification, now it's done by robotic process automation along with data analytics. Artificial intelligence is not a separate technology. Everything is combined in our practical scenario. And there's three types of RPAs like probots, nobots, and chatbots. We have been contact with chatbots, like when we open a website, near a pop-up, how may I help you, Mr. So-and-so. That's the chatbot. And how we use RPA in audit is, robots can perform predefined tasks such as processing cash entries, preparing invoices, or running master data setup routines. Robots can now interact with systems and applications in the same way as humans do. And robots follow precisely defined action protocols and procedures. They can also capture and retain required audit trials and automatically report on matters such as exception reports. And number two technology is blockchain. Blockchain, it's a distributed ledger. To understand blockchain, ever use Google Forms? Google Forms, right? It can be distributed along to all the members to fill the document, fill the details. Whenever they fill the details, it will be updated in your main source, right? The other person, even the Google Form shared with 3%, 1% updated the information, but others cannot alter that. Even he cannot alter that. I mean, it's not exactly blockchain, it's a methodology of blockchain. It's a distributed shared ledger. And it has a hash key which differs from encryption. You have learned in CA and information technology, encryption, it has encoding of data and decoding of data. But in blockchain, in encryption, there is only two steps, encoding and decoding. In blockchain, when we use hash key, we can set multiple layers of security. It depends on the secrecy of information and all. And it is highly secure, and it is decentralized. There is no central authority for blockchain methodology that like one person is controlling on the transaction. Even if you do anything wrong in blockchain, the other person will not know that you are doing wrong in that. But the impact will be there in a chain, but you cannot find the source where the problem has been happened. Next, opportunities in auditing. When it comes to the main, audit evidence, it is audit documentation actually. Yeah, audit documentation is a 230. Every time we cannot go to the organization and take the cash entries or back statement or another details. We can find that in general blockchain environment if the entity is really using the blockchain technology. And audit evidence also, there is a tool. Like as I told you, in one of the audit methods, we have to question the employees questionnaire. So we can simply send a Google form to all the employees. They can answer the questions. We'll get the source. We'll get the evidence in our hand without interacting with the employees directly. It reduces the time and effort of the auditor. And audit sampling. We have seen in the sampling 530, we can take only 70% of data, 80% of data. Why complete sampling is, complete verification is required, we'll tell in data analytics. And with using the blockchain, we can verify 100% of data because there is no connection, there is no mistake in the connection of blockchain because one block is connected with another block during the chain. If I want to remove this information or this block, the entire chain will get disturbed. So it won't be possible. Just mark this word. I'll alter the statement at the end. Cybersecurity. Cybersecurity involves techniques that help in securing various digital components that help computers and networks from unauthorized digital access. So that's the statement. And what are the attacks the cybersecurity. We have faced all these attacks, not all, at least one or two attacks. Everyone have been faced, but you don't know it is a cyber attack. First one is malware. When we download some movies or some pictures from unauthorized access, or when we type some websites in a Google, it shows that access is denied, or your mobile or your device get it will not be safe. If you want to continue, you can continue there. It is a one type of cyber attack. When we download some from unauthorized sources, the malware, the virus will get into our system, and the hacker will it is very easy for the hacker to capture the entire device. And second one is phishing attack. We have seen some mails, we don't know, but we'll get many mails from different sources in that online rummy game or Teen Patti or some games, or you want so much amount to encash that, you'll click on the link or something. All this is phishing attack. And number 3 is password attack. We can easily guess someone's password for sometimes, And the fourth one is man in the middle. The hacker will sit in between system and network. If we access network from our system, he'll capture our IP, and then after, while with using our IP address, he'll hack the network. That's the man in the middle. To overcome these things, we'll get some cyber practices. The man in the middle generally happens when we use a public Wi-Fi network. So install a firewall and safe and secure Wi-Fi. We have to use safe and secure Wi-Fi, and secure physical devices, update software and firmware simultaneously and regularly. Cyber securities, there are 4 types of cyber securities. Cloud securities will take security as a service directly from cloud. And network security, when we are in connect with some network, they'll provide cyber security directly to us. And data loss protection, antivirus or anti-malware. Challenges. As I told you, in blockchain, if anybody done some fraud, we cannot able to find the source. Exactly, the phishing, as I told you, the mail, different links. If one employee click the link, entire blockchain will get into trouble. But we cannot find the source who is the person clicked the mail or link. That's one challenge we'll face. And the employer accidentally, deliberately sends a Bitcoin to wrong recipient or wrong person. Because it is decentralized. We don't have any centralized network to get back the Bitcoin or some cryptocurrency. So that's another problem. And data analytics and cloud computing. Data is everywhere, as I told you, the pictures and selfies and all. Even day before yesterday or 2 days back, I've received some Swiggy's statement that till now, in 1st January 2021 till December 29 or 30, 6 crore biryanis have been ordered in a Swiggy. It's like 115 biryanis per minute. Roughly, we can say 200 rupees per biryani. 6 crore into 200 rupees, how much? 6 to 12? 1,200 crores. As I told you, sampling, let's say 5% normal risk, 1,200 crores into 5%. Again, 60 something. Yeah. So, 60 lakhs or something, what? I'm bad at math. 60 crores? Yeah. If you take 5% normal risk from an organization, 60 crores worth is in danger. But it is only for biryanis. In Swiggy, we can order something more, right? It is only for Swiggy. There are another chain companies like Zomato and Dunzo in some areas. So we cannot ignore 5% or 10%. The days are gone. When there is 100 transactions, you can ignore 5 to 10% as normal risk. Now thousands and lakhs of transactions per day is coming. In one of the videos, I've seen the SIR videos. 2010, I'm not sure whether it is correct or not, Google CEO has been given a statement that from the age of dawn, from the inception of a human birth till 2010, how much data has been created. After 2010, for every 2 days, the same data has been created. So that much data is evolving around us. As I told you, Instagram picture, I tag 4 members, 4 will tag, repost it. And when I can send in a WhatsApp group, 30 members in the group, the same conference scenario. Yesterday somebody sent in a WhatsApp group. If I am from outstation, I can send the same picture to 4 of my friends. They'll put in a status. The status will be shown by 40 or, 100, 200 people at least. Everything is data circulating. So data is everywhere. And cloud computing, we all know cloud computing. We have done in ICAI, Inter and all. Cloud analytics is nothing but cloud data has been stored in a cloud. When we require, we extract data from cloud to get intended results, to use the data and to get results. That's called cloud analytics. Even if my system has only 2 TB of capacity, I can extract 100 TB of capacity by using the cloud. If you have only internal memory of 64 GB, you cannot download movies worth 74 GB, right? But I can extract it. It's done. I can analyze the 100 TB of data by using only 2 TB of RAM with me. That's the data and cloud together work. This is the major important thing, data competency maturity model. It's initiated by our own institute to understand how they are in practice, how the firms has been updated to the technology. So due to time restriction, I'll cut here. But if you are interested, digital accounting and accounting and auditing board of ICAI has been introduced this last 2 or 3 years back. I'm not sure. So how your firm is in technology, whether it's good or not. If it is bad, we have to enhance. That's it. And what we can get conclusion. So data is everywhere. Audit has been changed. Income tax has been changed. Down the line, 5 to 10 years, not now. Don't go to office and tell that we don't do returns and all. And down the line, 10 years, and you can. It's an open conclusion. You can share your words also here. And I told you the blockchain is. Blockchain is completely new. But ever heard the word called quantum computing, sir? Quantum computing. Yeah. If the quantum computing will come here, blockchain has no relevance in terms of financial services industry. Even we are getting to know about blockchain now. We are into basics of blockchain. But if quantum is there, if that will implement in financial services industry, banks and insurance companies, blockchain have no relevance in particular stream. That day to day, the technology has been improved. And we can say one thing, we are less people here, but down the line 10 years, we can use augmented reality or virtual reality. We can sit in our home and we can imagine the entire auditorium there itself by the mask or something. Yeah. In 2022, mixed reality is the future. In mixed reality, we can touch the laptop virtually. By sitting in our home, we can walk like this and I'll get up to the stage. When I move like this, the audience will react over there. That's the future. Just go to Google and type different type of technology in 20th century. You'll find long list, very long list. So, and also CAs are called as future engineers in Industry 4.0 because the technology is new. If you come and understand the technology, you'll be on top. If some other guy come and analyze the technology, he'll be on top. There is no particular stream that only BTech students will come and analyze the technology. It is new. It's open opportunity for everybody. And thank you all. After this session, if you have any doubts, you can contact me. Thank you.
Thank you, Mr. Siddhartha. Our next speaker is Ms. Begum Shahjahan Shabnam. She's a CA final student and she's a national elocution champion for CA students talent hunt held at Odisha in this year. She is also the first runner-up representing ICAI at the South Asian Federation of Accountants Elocution 2021 and numerous more such awards. Her topic for presentation is Business Responsibility and Sustainability Reporting, BERSR. Over to you, Shabnam.
Hello. Obviously, you might have got scolding from your mother for not switching off the lights and fans in your room, isn't it? It's more obvious that when you came for an office where you are doing an articleship, you might have switched off the lights and fans. Sometimes maybe because you are more concerned about conserving the energy, but more because sometimes your principal may be watching on you. Raise your hands if it's so. Yes, obviously yes. This is because we might be sometimes held responsible for the number of prints that we take from the printer, for the increase in the electricity charges in our office. This is because responsibility is that will be put onto our head, and that is what we more care about rather than conserving the nature. So my topic for today is something that is very much related to responsibility building and reporting therewith. You have seen a long sentence over there, and you might be wondering, is this a topic or is this an entire paragraph which I have typed over there? But it's not, but it's actually a small report. Small? No, but in fact, it's very complicated. My topic for today's session is Business Responsibility and Sustainability Report, BRSR. Honorary dignitaries on and off the dais, and all those who have lent me your ears, a very warm good afternoon. So, when you go on to this particular picture, this is actually the CSR spent from the year 2014 and 15 to our pre-corona era, that is the 2018-19 year, where the actual CSR spend is from 6,556 crores, which was in that year, and which had an upturn till 11,961 crores. Of course, it's mandatory as per the Companies Act, and with the increase in the amount of net profit, of course, the amount of CSR that needed to be spent by the companies will be increased. But when you go on to the next representation over there, here we have the total CSR amount that is spent by, you can just go on to the name of the companies over there, whether the top 10 companies of India which have contributed to CSR, and this is the data of financial year 2020 and 21. It's not in numbers, it's in crores. Yes, the Tata Group have actually contributed more to the CSR than what is actually required as per the Companies Act. So, what do you think? The corporates are being more responsible, not because they are just mandatory, but because they wish to do. Now, when you look onto this, there was a survey that is conducted in 2014, and you can see that 55% of the consumers in not just one country, but almost in 60 countries said that they would buy products or they would take the services of those companies which are more committed toward positive social and environmental impacts. That means, I will give you a simple example. Everyone might have bought the notebooks from ITC, that is the classmate notebook, isn't it? In the back, you can see something that we are preparing these books without cutting the trees. If you're buying this book, this percentage or rupee 1 may be contributed to saving whom? Women and small children. You might have seen this. It's all part because when we go on to a particular supermarket or something and we go on to buy the book, at least once in the sense I'm only telling about those people who are having humanity like me, So when you go to a market or something, you should, of course, you will buy something and you will think that it's contributing towards the nation, it's helping the poor, it's helping the needy, and of course, I will buy it. So this is a simple example on how interested are we in buying those products, and hence 55% of the consumers are willing to buy those products or services. So we all know that all the disclosure requirements have leapfrogged globally in the last decades. So we have to protect the interest of the stakeholders, and also we must be responsible for the sustainable use of resources, and also adherence to various laws and requirements will be a necessity. As you are aware that my topic is BRSR, let us just have a quick rewind of how this BRSR have actually came into force. The first one, the voluntary guidelines on CSR. The voluntary guidelines on CSR have first put out by the MCA in the year 2009. Later, it was elaborated to NVG. NVG means the National Voluntary Guidelines. As per the National Voluntary Guidelines, irrespective of the size and the nature of business of an entity, that particular entity should have to have some kind of social commitment. And later on, after the year 2011, there came the NGRBC, that is National Guidelines for Responsible Business Conduct. This is actually originated from SDGs, that is the Sustainable Development Goals, which was put forward by the United Nations, on which I would be speaking on my next slides. After the year 2019, BRR, the Business Responsibility Reporting, have also come into force with NGRBC. At first, BRR was only for those 100 top listed companies, and later on the year 2015, it was again brought forward to 500 listed companies, and finally in the year 2019, it came to top 1,000 listed companies. But later on, SEBI thought we have to incorporate all the global developments into the Indian context as well. As well means an inclusive kind of reporting. What I told? It's inclusive. And please note the word. Entire BRSR is all based on this inclusive reporting. The BRSR, the Business Responsibility and Sustainability Report. In 2020, a paper for consultation for general public was put forward by SEBI. And in the year 2021, it was put forward that the top 1,000 listed companies can issue the BRSR report in the year financial year 21-22, and later on, it is a mandatory basis from financial year 22 and 23. Also, the most recent amendment is that a notification was issued by the MCA for BRSR format and guidance note, which was issued on 10th May. This is the background from which this BRSR report have come into force. Next, what is actually the objective of BRSR? As I told that BRSR is an inclusive kind of reporting. The top over there, you can see SDGs, the Sustainable Development Goals. We should have a development, but it should be sustainable. Whatever that has been included in BRSR is based on the pillar of sustainability reporting. The next one is NGRBC, the guidelines, the UNGP, the United Nations Guidance Program for Responsible Business and Human Rights, and GRI, the Global Reporting Initiative. Everything has been combined and brought towards you as a beautifully cooked curry, mixed with all the flavors that is required for prosperity, and hence BRSR have come into force. As I already mentioned, NGRBC have been arised from the Sustainable Development Goals of 2030, which was put forward by the United Nations in the year 2015. If you just have a glance on this particular slide, you can see various goals from 1 to 17. You might be wondering, what does this goals is dealing with the economy? How does this goal is dealing with the financial performance of an entity? You can just see like point number 8, decent work and economic growth. Okay, that's actually related to economy. Point number 16, peace, justice and strong institutions. How do you think that peace and justice is going to affect my profit? How do you think this point number 4, quality education? If, what would this quality education contribute to my business? Then there is point number 6, clean water and sanitation. How does sanitation is going to affect my business actually? So This Sustainable Development Goals, it's aiming at a way of comprehensive reporting of sustainability, wherein a business or an entity must have steps, or they must carry on such activities in such a way that they must follow these sustainable goals. That means the conduct of a business should be carried down in such a way that it matches with these goals, these targets which are over there. Each and every activity of a business should finally come to a conclusion or finally come to a result which will have a positive impact on all the 17 sustainable goals. For example, I will give you an example. For example, for the purpose of CSR, we are having the clause that where if you are spending our CSR money for the welfare of our own employees, then that wouldn't be considered under CSR under section 135. But here, the Sustainable Development Goals requires us to give a quality education as a part of our social responsibility. R means the entity's social responsibility. The entity can build, for example, they can build a kindergarten, or they can build a small school, or they can contribute towards the tuition fees, etc. Okay. There might not be deductions for this. This might not be covered under the 2% of net profits of CSR, but of course, this is necessary for BRSR reporting. Hence, our responsibility for each and every of these cases will be laid totally on the company itself. If I go on explaining like 17, I can take like 17 hours. Like for each goals, I can take 1 hour to go. But since my topic is BRSR, I'm more into that. Next one is the ESG concept. The BRSR was actually erased because of a clearance, means a crystallization of the ESG concept. Here, ESG means environmental, social, and global concepts. You can have just a glance on that. How does this ESG affect a business? E stands for environmental. Like, I will just give you an example. How does reduce, recycle, and reuse principle have been followed by a company? And how does carbon credit has been, as sir has already mentioned, how have carbon credit been used by the company? How less is the environmental pollution caused by the company? Small example that you can take, when you are doing the audit of a company, you might look into the license of the pollution control board. If you are looking audit of a particular factory, you can look the license given by the pollution control board, and you can look on to the emittance of the gas into the environment that is done by a particular company. And when you look on to the social concept is very relevant, like the gender ratio, the equality that we have in an institution, what is the median wages that is given, and what is the turnover rate of a company, etc. Another easy example is that in the audit report for listed companies, you might have seen that protection of women from harassment rules, isn't it? That's very much aligned with the concept of social, which you can actually now relate it if you're doing the audit of a listed company. And when you come to the governance, there are certain concepts like the timely disclosures, timely filing, the stakeholders engagement, anti-bribery, anti-corruption, etc. For a simple example, I would like to tell about the vigil mechanism. I think you all might have heard about what vigil mechanism is. This is actually connected with the governance of a company. Whistleblower policy is another example, which is actually covered with the governance of the policy. So now you may ask, what exactly is BRSR? Everything you have been talking is currently in this Companies Act or the SEBI LODR regulations. But what more is BRSR? BRSR is such a kind of formatting which is a consolidated, comprehensive, non-financial disclosure. And what I mean, it's a non-financial disclosure on how each aspects of ESG have been covered with. Now, when we go on to the levels of responsibility, you might think that economy, profit, income is only my aim. But this clearly shows why we should be a good corporate citizen. As you can see, the entire society is built on a pyramid where economic responsibility is the widened scope, is the pillar on which all the responsibilities are built. The economic responsibility, we have to be profitable. Legally, we should obey the rules. Being ethical should be our duty, and also the philanthropic responsibility, we should be a good corporate citizen. So why do you think that being a good corporate citizen is on the top? Why do you think? This is because in the long run, if we are good, If we are good in the sense, if we are a good corporate citizen, we will be having an existence. For example, if there is a case against a particular NBFC, that means a non-banking financial institution, where they are using recovery agents. Recovery agents, but they are actually goons. Goons who are going to attack the people to collect the interest which they have not been given. But you are an NBFC wherein you have a mark that you have been calling these goons to collect the interest from other people. Do you actually think that is a good philanthropic responsibility? I don't think so. Is it being a good corporate citizen? There will be, of course, a black mark to this NBFC for violating the philanthropic responsibility which it actually have. So, even though economy is our responsibility, in line to that, we must have a philanthropic responsibility. Just give you an example, which I have heard natively. That means that we should have the plate first to eat. Without the plate, then how can we eat? Without a plate, then how can we actually eat? I don't think it's possible. So responsibility, everything lies in the top rather than economy. Now, we have an overview of BRSR report. Actually, BRSR report outlines the significance of ESG into the mainstream. The interoperability, like the cross-mapping of this with the TCFD, the Task Force for Climate Conduct, the GRI, the Global Reporting Initiative, etc. Also, the essential and leadership indicators, which I would be covering what are the concepts involved in actual BRSR report. Next one is sustainability reporting. CSR is actually the amount we spend on the past events or the past profit which the company earned. But sustainability is for the future. It's the future reporting what we actually do. And the assessment metrics. Assessment metrics mainly is linked with KPI, that is the key performance indicators of a company. Now, we have to look on to what are the key elements of a BRSR format. Once we are doing this BRSR and once we are concentrating into sustainability, it will actually set a benchmark in the industry. It will impact our investments, and also the training awareness will include, the assessment disclosures will get widened, and also the key performance indicators standard will be set. For example, when I give you the example of ITC, it's quite obvious. ITC have set a benchmark. When I tell about Tata, he have contributed, wherein there is a story in one Malayalam movie, how was the nano car invented by Tata. First, when he sold some, in particular scooter in some regional rural parts, where the mother, the father, the three kids were sitting in one particular motorcycle and they were traveling, and he was very concerned about how a small earning Indian family, how can they travel in such a motorcycle? It's a very dangerous thing, and thus he created the nano car. So a kind of person who's behind Tata, who's behind this Tata company, Mr. Tata, has actually set a benchmark. Now when I say about M.A. Yusuf Ali or Mr. Tata, what is the image that comes in your mind? It might be an image with wings. It might be an image with wings. And that is what actually BRSR aims at. Now, when you come to the disclosure requirements, it can be split onto 3 sections. First one is the general disclosure. Second is the management and the process disclosure. And the third one is the principle-wise disclosure, which includes the essential disclosure as well as the leadership indicators. For example, principle 1 to 5, I would just say in a few words. Principle 1 is we have to conduct the business in such a way that it is reliable, accountable, and it is with integrity. The principle number 2 is goods and services that is actually being sold by the company should be sustainable and safe. Third one is regarding the employee satisfaction and the employee attrition rates, etc. Principle number 4 is regarding how importantly the interest of the stakeholders have been followed with, and principle number 5 is promotion of human rights. Of course, even the human rights, the basic human rights are also covered under our BRSR report. And that's why this is actually totally different from what CSR is. We have a few examples of what is the difference between BRR and BRSR. BRSR is required to be reported under MCA 21 portal, whereas BRR was only an actual annual report. BRSR is mainly based on the ESG mainstream, whereas BRR is based on the 9 core principles. Now we have the 4 factors where sustainability reporting is being encouraged. You can see even the climate change. the Tokyo policy, etc., the enhanced database, it would reduce the cost of operations. For a simple example, when you send an email, your institution may be having one particular paragraph written. Please protect trees. Please don't print this email. You have seen it, right? Please don't. So it might lead to a reduced cost of operations. And also, of course, it will attract and retain various talents in our home country and for the purpose of development of our country. Then for the external factors, of course, you know that brand building. Of course, brand building will happen in case if we are good at the BRSR report. Also, when we are doing a standard format of BRSR, the accountability and the kind of transparency to all the operations will be very clear, and it will generate a value for the company, and also a broader perspective of each activities would be covered if you are doing BRSR. The main important thing is that it is having challenges. How are we going to address what have actually contributed to sustainability? We don't know. How can we actually compare the sustainability performance of one particular entity with other particular entity in two nature of business? It's actually confusing. And I think, as sir already told, that it's actually the scope of the future chartered accountants that we have to think the methods and ways. You have to contribute to the sustainability account body, and you have to think on what are the mechanisms or what are the methods that is to be inculcated to bring out a consolidated report of comparing two entities. In future, this sustainability reports might come for a comparison purpose for credit rating agencies as well. For concluding, I would like to say that it's a complete revamped report where it's an inclusive reporting. Inclusive reporting, you can see that image over there wherein hands are closed. It's simply based on the concept that Loga Samasta Sugino Bhavantu. That simply means if we are good, we, not only us, but whatever is around and the entire world should be good. And there is no great luxury than sustainability. We should use all the resources in such a manner that we contribute to a fair, just, promising, and happy future society. So thank you all for your patient listening. Happy to have all your queries, suggestions. Thank you. Thanks a lot.
Thank you, Ms. Begum. Our final speaker for this conference is Mr. Harikrishnan R. He's a CA intermediate level student who has been an active member of Ernakulam branch of SICAS of ICAI for the past 3 years, beginning with the position of the editor in 2018 and joint secretary in 2019, ending his reign as a vice chairman in the year 2020, in the year in which the branch won the second best branch award at all India level. His topic for presentation is Insolvency and Bankruptcy Code, an overview. Over to you, Hari.
ഹലോ കേൾക്കാം ആ പി പി ടി ഒന്ന് ചേഞ്ച് ചെയ്തോ the timing of the session. I'd like to warm up the audience maybe a little bit. Is that okay, Chairman? Yeah, so I understand the demographic of the audience. Most of you are IPCC students and some of you are final. And maybe, are there any CPT students here? No, right? Thought so. Okay. And we have our very eloquent chairman here who is half asleep right now. Sir, please, I understand this is a bookish topic, but please stay awake. So, yeah, the lights are not doing us any favors as paper presenters because, frankly, we feel like vampires. It's burning our skin and our retinas altogether. And with the glasses on, it's actually dispersing the light a lot. So, if I don't look at you, please don't be offended. You're all very beautiful. So, with the permission of the chairman, I'd like to start my session. And please don't fall asleep. I know your minds and your tummies are just as full. So, please. Yeah, Toastmasters inspiration. So, the Insolvency and Bankruptcy Code 2016. That is my topic today. I'm here to give you an overview, basically a structure of the wide and detailed law that is the Insolvency and Bankruptcy Code. While the law is, in fact, very detailed, the problem with the law is it can only be read with case laws. The case laws are what constitutes a lot of the decisions in this particular code. So let's discuss a few concepts before we begin our discussion of the code. So the first one is insolvency. I believe it was Jay Chera sir that said yesterday, ooh la la la. Thank you. So yeah, we all know the story of Kingfisher, the king of good times, whose reign came to an end abruptly. And is that what insolvency is? Is it the same as bankruptcy? Or if I'm going to a tea shop and I don't have the money to pay over there because my purse was stolen, does that make me an insolvent? Well, the answers to these questions might seem very simple, but in fact, it's a detailed discussion that we need to go through to actually ascertain insolvency, bankruptcy, liquidation, all of those. Let's understand what insolvency is. Insolvency is basically the inability to pay off the debts with your assets. It is when your assets are not sufficient to pay off your debts. Insolvency can be for individuals and for corporates. For corporate, it is called corporate insolvency. Now, insolvency, when it goes untreated, can lead to bankruptcy in individuals, and in corporates, it can lead to liquidation. To understand the relevance of IBC 2016, we actually need to understand the history of insolvency laws that existed in India before IBC. IBC, being a novel law, is actually quite new and it's still under development with all the case laws, all the amendments and all of that. But before that, this was the situation. Sorry, not this. Let's discuss the past of the insolvency laws. Insolvency, as we discussed earlier, can be for individuals and for corporates. For corporates, there were 3 acts that worked in tandem with each other to provide insolvency resolution. The first was the SURFACI Act 2002. The second was the Recovery of Debt Due to Banks and Financial Institutions Act 1993. And certain sections of the Companies Act 2013. For the individuals, there was the Presidency Towns Insolvency Act 1909 and the Provincial Insolvency Act 1920. So, why did we need a new law in the first place? Why couldn't the old laws have been there and helped with the insolvency process altogether? Well, there were a few reasons. The first one was the piling up of NPAs, non-performing assets. If you are an intermediate student and you've learned advanced accounting, you obviously know what an NPA is. The second was the long wait times to recover the money. Once you file a suit, it would take a long time to actually get the suit settled and get the money. Third one was all of these resulted in the flow of credit not being very free in the economy. The fourth one was multiple legislations and complexities that these created. And the fifth was that all of these reasons led to lesser clarity in the overall process. That's two of those covered. Let's move on to an introduction of the code. The long-awaited new law. The IBC 2016 sought to perform as an umbrella act, uniting all the other acts, that is the SURFACE Act, the Debt Due to Banks and Financial Institutions Act. All of these acts were brought together under the umbrella of the IBC Act. It sought to give a time-bound resolution process, usually 180 days. And there were multiple improvements that the public actually wanted from the old acts that were included in this act, like data banks, a proper regulatory authority, etc. We'll be discussing more on that in the presentation. Let's understand the structure of the law. With this, what I want to give you is a basic skeleton of how the law looks. The law consists of 255 sections, 12 schedules, and divided into 5 parts. The first part is the preliminary part. It has from sections 1 to 3 and basically shows you how the act came into place, when it is applicable from, etc. Part 2 is the insolvency resolution and liquidation for corporate persons. Final students, please note this is what you need to focus on. Part 3 is the insolvency resolution and bankruptcy of individuals and partnership firms. Part 4 is the regulation of insolvency professionals, agencies, and information utilities. Part 5 contains miscellaneous sections. Thankfully for all of us CA students, Part 3 is not yet notified. So you don't really have to deal with insolvency of individuals and partnership firms under this act at least. Now, I told you the new act put in a new regulatory mechanism. The regulatory body they put in is the IBBI. Under it are insolvency professional agencies, insolvency professionals, and information utilities. The IBBI is the regulatory authority that was constituted on the 1st of October 2016. The purpose of the formation of this body is to perform different functions with respect to all the entities that come under it. And the composition is that of one chairman, 3 members from the central government, representing 3 different central government bodies, namely the Ministry of Finance, the Ministry of Corporate Affairs, and the Ministry of Law. And 5 other members nominated by the central government, at least 3 of whom are whole-time. Let's understand what insolvency professional agencies are. I told you there are 3 parts under IBBA. The first is the insolvency professional agencies. Basically, it is established through the code to enroll and regulate insolvency professionals. It is very similar to ICAI, what ICAI does. They conduct an exam, they take members, they regulate us, right? Once we are CAs, we are under the regulation of ICAI. It has 3 main functions. They are regulatory, executive, and quasi-judicial. The regulatory function is to develop laws for IPs. The executive function is to monitor the members, track their performance, and deal with malpractices. Quasi-judicial function is addressing grievances and hearing complaints. Next are insolvency professionals. If the IPA is considered ICAI, insolvency professionals are the CAs. They are the members registered under the IB. Insolvency professional verifies the claims, runs a debtor's business, and acts as a liquidator. You might have heard in your advanced accountancy questions that the liquidator is paid 2% commission on all fixed assets that are received by him, right? Taken over and sold by him. Well, if you think about it, most companies that go into liquidation, are the huge companies especially, might have 300 crores, 400 crores of fixed assets, right? 2% of that comes to, please? 4 crores? Oh, 4 crores, huh? 300 crores, seriously, come on, CA student, dude. 6 crores, let's say 6 crores. 6 crores is enough, I guess, to keep 2 generations rich, maybe, if you're investing and all of that. We'll get into that another time. But still, yeah, I guess it's enough to keep 2 generations rich at least, as per my spending limits. Now, it's not as easy to become an insolvency professional. You actually need to pass an exam. So if any of you are planning to leave CA and go become an insolvency professional, let's think about that a bit more. Next, what we have to discuss are information utilities. Information utilities is a centralized economic database that contains all the information of the debtors. This info can be made available to the creditors and financial institutions upon demand or during a CARP procedure. Now, if, let's say, me and Rajat are having a fight, and Purna comes in between us and tries to solve the fight, she's the quarrel settler. Okay, basically, she can be said to be an adjudicating authority. This is a basic definition. It's not real or anything, but just to make you understand the concept. If I'm not satisfied with what Purna does, I can go to Shimi. Okay, and get a different hearing maybe from her if I'm not, being annoying or something. Anyways, I go to Shimi. She would be considered the appellate authority. So let's discuss what the adjudicating and appellate authorities are in IBC. For individuals, although not covered under IBC exactly, the adjudicating authority is the Debt Recovery Tribunal. The appellate authority is the Debt Recovery Appellate Tribunal. And if I'm still not satisfied with the outcome of it, I can go to the Supreme Court of India. For corporates, it is the NCLT, that is the National Company Law Tribunal. And for the appellate tribunal is the NCLAT, the National Company Law Appellate Tribunal. And if I'm still not satisfied, I can go to the Supreme Court of India and annoy them. Now let's discuss the insolvency resolution process. Okay. If, in my previous example, if I'm not paying the tea vendor the money for the tea I had, what can he do to get the money from me, basically? Well, like Begum said in her presentation, you can obviously send thugs, recovery agents, to get the money, but there is a more docile method that is a bit more practicable, according to the IBC. The third part, as I told you, has not yet been notified. So for individuals and firms, the DRT will accept the suits. If you're not satisfied, the DRAT would be the appellate authority. Suits, okay, thank you. For corporates, the process of insolvency resolution is called CIRP, the Corporate Insolvency Resolution Process. It is for companies and LLPs, and it is discussed under Part 2 of the code. This presentation will especially focus on the Part 2 of the code because that is what is necessary for all of us right now. Right now, the part applies to corporate debtors, and the claim amount, that is the amount of default, was 1 lakh rupees. But then the central government, being the central government it has to give us some amendments for our exams, right? So they, through a notification dated 24/3/2020, has amended the minimum amount of default to 1 crore rupees. Let's understand what default is. Default is the non-payment of debt. It can be in whole, in part, or of any installment. When the amount is due and payable and is not paid by the debtor or the corporate debtor. Now, imagine I am a company and I have defaulted. Okay, who all can sue me? Who all can start the CIRP procedures? First, the financial creditors can start a CIRP procedure. Operational creditors can start the CIRP procedure. And the corporate debtor himself, that is me, myself, can start the CIRP procedure. the date of commencement of insolvency is quite important. I told you, right? That it is a time-bound process. It takes 180 days, and it can be extended in certain circumstances, but let's say 180 days. The date of commencement of insolvency is the date of admission of an application for initiating the CARP by the adjudicating authority. It can be under Section 7, which is for financial creditors, Section 9 for operating creditors, and Section 10 for the corporate debtor himself. When it is initiated by the financial creditor, a financial creditor may himself or with other financial creditors start the CARP when there is a default. They can submit it to the adjudicating authority. The application should be submitted with the necessary documents. The adjudicating authority, on receipt of the application within 14 days, will ascertain the default and admit the application. Or it can also reject the application, of course, but based on the, also based on the evidence furnished by the financial creditor. Otherwise, the adjudicating authority will issue a notice to the applicant to rectify any errors in the application. The adjudicating authority will communicate the order of admission of or rejection of the application within 7 days to only the financial creditor. That is, when I submit the claim and it is rejected, it needs to be communicated only to me, right? But if it is accepted, it is also communicated to the corporate debtor, whoever defaulted. Initiation by the operational creditor, where there is a default, and the operational creditor is basically someone who provides you goods and services and you need to pay them money back. Okay? That is the simplest definition. So basically, when there is a default by an operational creditor, the demand notice is served with a copy of the invoice to the corporate debtor. The corporate debtor should reply within 10 days. The reply must contain a statement of dispute or a proof of payment. If no reply is received within 10 days, the application can be submitted to the AA for initiating CARP along with necessary documents. These are the documents that need to be submitted along with the to the AA. And if the application is seen fit within 14 days, the same can be admitted or rejected. It can, if admitted, a notice will be sent to the operating creditor as well as the debtor within 7 days of the within 7 days. If the application is rejected, that will also be communicated to the operating creditor only within 7 days. In the initiation by a corporate debtor, that is, when I myself seek to initiate the CARP proceedings, where there is a default, the corporate debtor, I can myself initiate the CARP procedure through Section 10 of the code. The books of accounts and all other necessary records and documents should be submitted to the AA. The name of the resolution professional, that is the IRP, should be submitted to the AA along with the application, and the AA can either admit the application if there is no deficiency, or it will communicate the deficiencies to the corporate debtor to be corrected within 7 days of receipt of such communication. The start of CARP. I know I got the yellow signal, don't worry. NCLT will do 3 things by passing an order. It will appoint an IRP, declare a moratorium period, and give public notice of CARP inviting claims. Appointment of IRP. IRP shall be appointed within 14 days from the commencement of the resolution process. IRP is the same person I told you that comes under IBBI, okay? If the application has a proposed IRP, that is the application earlier submitted has a proposed IRP, that person can be appointed. Otherwise, the central government, that is the adjudicating authority, can appoint an IRP themselves. Let's understand what the moratorium period is. The moratorium period is a time in which the debtor is prohibited from doing a lot of things. Basically, they're tying him up without escaping, basically. The moratorium period, once declared, is like, what do you say? They don't want you to escape to London, basically. It shall cease when the CIRP process have been completed, or liquidation is effected, or the resolution plan has been approved by the adjudicating authority. Next is the public announcement. The IRP shall give a public announcement within 3 days of appointment. It will contain information about the debtor, penalties for false claims if any are made, and the last date of submission of claims. The IRP will also determine the financial status of the debtor and convene a COC. Where financial creditors exist, all the financial creditors will be members of COC. Where no financial creditors exist, 18 of the largest operational creditors will form COC, along with a representative of all the workmen and elective representatives of employees. If no IRP was proposed or IRP proposed was disqualified, the AA shall approach IBBI and appoint IRP that is referred by the IBBI within 10 days. The information memorandum is the next step. It is a document prepared by the resolution professional. It contains all the relevant information that is specified by the board for creating a resolution plan. The resolution plan. The resolution plan is basically a proposal that is agreed upon by the creditors. You basically convene all the creditors and agree upon a resolution plan. That is what is called, that is the resolution plan. I understand this is a very huge chart, but this is basically the process of CIRP. Okay. Should I discuss this? No. Thank you for the interest, seriously. Out of all the things that are not working out for me today, this is one of those. Let's also discuss opportunities for chartered accountants in this space. Right now, the institute has a special board that deals with insolvency and bankruptcy, especially to train the members. Insolvency and bankruptcy proceedings are something that needs a lot of professional help. Jay Chera sir told us yesterday that instead of going to compliance, we should probably think of purely professional services. This is one of those. Sorry. To conclude, let's also say that we are right now, we have the power to be advocates as NCLT. We have the power to basically case vaadikkanulla power namakkundu. So why not use it? Why not go into IBC? It is one of the upcoming futures for our profession. So that's all from me. Thank you all.
Thank you, Mr. Harikrishnan. With that, we've come to the end of all the papers, all the technical sessions. Now I invite the session chairman for his evaluation and remarks.
So I think, don't you think it was like an amazing presentation, 3 different versions and 3 different very interesting areas which came out, friends. So I'll start like in a reverse order, how, we had the paper presenter went up. So Hari did an amazing stuff, that he has tried to simplify the whole concept. I would say, I would not talk about the presentation, but at the macro level, any idea, what do you think, why this insolvency code came at the macro level? What was happening? What went wrong? He actually touched upon that, but bigger than that, any idea what brought this momentum change in the thing? If you've heard about this concept called Chapter 11 bankruptcy, in US and other part of the world, it is something which is very common. But as he was talking about, I think the genesis of that was something very interesting. And friends, it's going to become more and more prevalent as we see, because we are going into something which we'll call as a startup culture, right? You guys will be, I'm seeing a lot of chartered accountants in, having their own startups and all the thing. And if you're a startup culture, there should be a kind of a way out in case the business doesn't work out. Now, earlier it was something which was not happening. And this code gives a great thing. And I would say a round of applause for, Hari Krishnan, because he does an amazing job of explaining it up. I think a lot of time, you will see in chartered accountants also when they tried to do it, it was not as simplified. It was great, I would say. I think the time went a little bit, but it was good.
Then coming to Begum, I think Begum is very passionate about ESG, because the way she explained it up, in fact, there are some points which I was not aware of because, ESG, that's a term which is being used extensively. And I don't know how many of you are in stock market and are investing into ITC and the stock prices are not going up despite they're doing great. And one of the reason is the ESG part because they are into tobacco business, which is something which is taken as on the pollution side and all things. And I think she did a great job in talking about all these things. And guys, please understand, this is a great opportunity. There are a lot of people who are trying to understand because these reportings are going to become a global reporting. Interoperability of that, trying to compare two companies on their ESG parameters is going to be kind of a tough thing. I would say that instead of bank reconciliation, we will be doing the reconciliations of, ESG parameters and all the things. So a round of applause to Begum also for a great presentation. And finally, we have Siddharth, who was actually talking about, from the ABCD, which is a continuation of what I was talking. It's interesting. I was very fascinated because he was talking about quantum computing and all that thing. So if you see, all the three speakers did a great job, and I'm just very happy that you guys, dealt with that. So I would say we should appreciate all their work with a round of applause. Thank you.
Thank you so much, sir. Now, second speaker, Ms. Begum Shahjahan Shabnam. Third speaker, Mr. Harikrishnan R. Now I invite Vice Chairman of Ernakulam branch of SICASA, Mr. Krishna Goban, to present a token of appreciation to our session chairman, CA Anand Prakash. Thank you all. We'll now soon proceed with the prize distribution. The speakers of that session were Ms. Nitina R. Jacob, Ms. Niti S. Kakad, and Mr. A. Praved Good. And the best presenter in that technical session is Ms. Nitina R. Jacob. Then, in the second day, the first technical session was direct taxes. The presenters for the day was Mr. Sunil Vengaldas, Mr. Shrey Nimani, and Ms. Fatima Nawla. And the best presenter in this session goes to Ms. Fatima Nawla. The fourth technical session was indirect taxes, and the session was chaired by CA Ganesh Prabhu. The speakers of the session were Ms. Himadri Jain, Mr. Rahil Lokanwala, and Mr. Abidin B. Kapasi. The winner of that session is Mr. Rahil Lokanwala. And moving on to the final session for the day, which was economics. The session was chaired by CA Anand Prakash. The speakers of the session were Mr. Siddhartha C., Ms. Begum Shahjahan Shabnam, and Mr. Harikrishnan R. The best presenter in the session goes to Ms. Begum Shahjahan Shabnam. I request all the winners to please come onto the stage for a photograph. All presenters.